here on Friday the 13th, 2020. Yes, it's Friday the 13th, and I guess it's been basically a Friday the 13th all week long in the markets, hasn't it? So real quick, we want to pull up our disclaimer to remind you that this webinar is for illustrative purposes only, just for education. That's it. So we will be doing live analysis and going over live trades. Once again, we always want to remind you that you are not to look at this as anything else but for educational purposes, and you don't want to try and tag our trades, because once you're in, we work them and whatever, you're not always knowing what's going on. So unless you're part of our signal service and having your trades managed, please do not try and mimic them, because we alter the targets and the stops and get in and out of trades when you don't know until after we've reviewed them with you in these videos. So please be mindful of that. And now, real quick, we've got a bunch of buy and sell signals that we're going to talk about today. They're high probable Japanese candlestick patterns, and ironically, there's a book actually entitled High Probable Japanese Candlestick Patterns. It's available on Amazon.com in paperback and Kindle version, and through it you can utilize the best buy and sell patterns used for over 400 years to give yourself a competitive edge against the markets. And with that, let's get to our live action screen and go review our trades that we have on. So we're at the Forex Trading Unlocked.com website. We already have the workstation page pulled up, and we have the US dollar Japanese yen trade market pulled up with this chart. There's a lot going on here. So what do we have? We have a buy signal that was triggered the other day. And from that buy signal, we put on a binary options trade of US dollar JPY greater than 104.25. As you can see, the trading time was 3:11 at 9:14 Chicago time. So that was 2 days ago. The signal was triggered on Tuesday, I believe it was. So the expiration is in 4 hours. As long as the market settles above 104.25, because we are long, then we will see a profit. Right now, we had paid $56.50 for it. You can see we are long one. The current market is at 92.25. It will settle at 100 if the market settles above it. So let's see. Well, we have a pretty good chance, since this is our binary option strike price. You can see this blue line here. This is the option that we had bought a few days ago, and as you can see, this market was triggered on Monday, was the buy signal, and then we had gotten in on Tuesday. So as you can see, the market has been very volatile for the Japanese yen, but our buy signal is held. And we have this pivot here at 103.091 right now. For anyone that is in the market right now, if you're looking to be a bull, you do not want to be long below this today or period, because that would mean newer move lows and be very bearish. Right now we have a nice bounce. This market had been in a long-term bull market. As you can see, the volatility that we've had in the last week and a half have changed everything. So for our trade that we have on, because of this bullish engulfing line sell signal, it will expire today, and unless this market completely reverses gears and makes new lows on the day, this trade here will be a winning trade that we have on here for this buy signal. Now, is the buy signal completed? Actually, yes, it is. This was our upside target zone. We have come into the lower part of it at 106.73. 108.05 is our extreme for this. Right now, we're viewing this as only a correction. So after today, we will raise our stops up to break even, because we have a trade here. Actually, we already have it above already. We have a long Japanese yen Forex contract on right now, and we will definitely be raising our stops depending on where the market settles, unless it settles just above where it's at right now. So we have the option, the binary option, FX binary option, that is going to expire today, and we have the Forex cash contract that now we are into our target zone. So we're going to be mindful of what happens here and try and figure out where we raise our stop to as when we get closer to the close today. But we've already hit our target zone, and we also have a US dollar Swiss 93.25 option on too. So we're going to take a look at that trade. So let's take a look at this one, since we already have the Japanese yen trade and we already have our points picked out. We know we're in our target zone. Well, we also had a buy signal, same thing, a bullish engulfing line buy signal the other day. This was a few days ago also, and we had put on this binary option of US dollar Swiss greater than 93.25. Now, that means that if the market settles once again above this price, which most likely it looks like it will today, then this binary option will be a profit, which we, as you can see, we had bought this one on the 10th, not on the 11th, so one day earlier. This has 4 hours left till expiration. This option we paid a little bit less for. We paid $54.50, and right now it is the current market 92.25. It will expire at 100, so we will make a little bit more than 37, almost $40 on the trade. So it's a good looking Friday morning shaping up right now. We also have this Euro US dollar trade, so we'll look at that in a second, because we also have on the futures, or excuse me, on the cash side, we are long the Swiss contract as well, as you can see here. So on the Meta MT4 platform, so we will be monitoring that and raising our stops, since we'd already raised our stop a little bit yesterday since it hit our target zone. We have a plus. This trade is a plus. We're going to make sure that a winner does not turn into a loser. But right now with the momentum, we may see if we can press this up towards this 95, 96 area, because we seem to have a very strong dollar right now. We have a little dollar bull going on. So right now, the way it looks, our binary option trade looks like it's going to expire in the money, which means we're going to make this signal will have been not only validated, but very profitable in that respect. So binary options trades are looking good so far for a Friday, as the market is whipping around, as you can see. So it's been quite the volatile day already for the currencies. The Dow Jones actually is up. It was up around 800. Now it's just under 800 points. So we have a positive day in the Dow. Of course, with the way that thing's been swinging around, it could be down 2,000 points tomorrow or this afternoon. So remember, they had the biggest down day since 1987. So the fact that it's 800 points higher right now really doesn't really mean very much. It's in the grand scheme of things. So, but that bounce is keeping things positive in the equity markets as they wind down. The rest of the world is shut down for the most part. Europe is closing. And now we have the U.S. dollar, which is, well, it's still swinging around. So the last 2 Fridays have not disappointed as far as volatility is concerned. And why would it stop now, right? So our U.S. dollar Swiss buy signal has entered our upside target zone. Remember that our extreme is 95.96. We are now in a positive trade. We got our stops raised. Well, one thing is we are in front of the weekend, so we have no exposure with our options. They expire today. That's why we are raising our stops a lot going into the Friday, because the Friday weekend trade for the weekend, because we don't want to have too much risk exposure, especially with the way the markets opened on this last Sunday. Like as you can see, we had this gap down here that we filled with the buy signal. Boy, it's just crazy how much volatility we've had in the past couple sessions, let alone the past week and a half. So remember, this market has been in a bearish trend. We had set that lower move low. Right now, we are most likely potentially going to just be a corrective move here, which means we are looking to set a lower move high. So now we're looking for a sell signal. So this buy signal is running out of gas. Now, we're not going to say that this dollar is not going to be a raging bull and all of a sudden take over the trend and be a whole new story, but right now we have every reason to believe that this is only a corrective move. So we've gone through 3 of our buy and sell signals that we've had this week so far, or excuse me, 2 so far. Now let's go to the Euro US dollar. So we had a bearish engulfing line sell signal that occurred also on the 10th, or on the 9th. And on the 10th, we put on this trade here with the Euro US dollar greater than 14.25, where we sold the option. We sold it at 35. So right now, it looks like we have another $7 left in the trade. So considering where the market is at right now, as you can see, this 14.25 is our strike price. Unless the market was to reverse all the way back up to here, I think that trade is going to be fine as a winner. We are also short the Euro US dollar as well on the MT4 platform in the cash, as you can see, and we will be adjusting our stops. Right now we have it at the high of the day. Reason being is we almost touched the lower parameter of our 110.50 pivot point here at the downside target zone. Yesterday you can see we just came just shy of hitting that, of tagging that to the pip. So, and then we bounced all the way back. We had a nice retracement yesterday. Talk about a range yesterday in the Euro US dollar. I mean, we've seen more action in just a couple of days over the past week than we've seen in any monthly, multi-month period in this contract for a while. So anyone that trades this contract and has been for a long time like I have is just loving this volatility. This is fantastic. So right now we're hanging in the downside target zone. We have our stops nice and tight right now, and we know we're going to profit on the option trade today. So it's just a matter of locking in our returns, lowering our stops, and seeing how the market closes. Like, there's still a good chance that, I mean, it's only 1 hour into the U.S. session. Anything can happen yet with the U.S. stock market. And as far as with the U.S. dollar going into this weekend, we have still a few hours left where with this volatility, anything could happen. This market could be, we're trading right now in the Euro US dollar at 111.05. We could be trading at 112, 113.05 later on, or we could be back down at 109.05. So with this volatility, who knows what's going on? The interesting thing is we're hanging out in our target zone, and unless we have a rally that gets above 114.20, oh, why did I have that wrong? That's the wrong number. 114.25 is the option price. There we go. So 114.25, this blue line here. So as long as we don't get a rally all the way up above there with a settlement above there, our option will be okay. So right now we're looking at our binary options right now. All three of the trades that we put on this week on Monday and Tuesday are looking to be profitable. So we're looking very good at that. And then we have the Euro US dollar Swiss trade and the US dollar Swiss trade that we'd already come into the week with. We are doing well with that. And we also have the US dollar Japanese yen trade that we put on this week as well that is currently right now doing well. All of these have stops in where we are protected, and we will have winning trades no matter what. The question is do we get out before the weekend, or do we just raise the stops and see if we can capture some more of the trends? So we've gone over these buy and sell signals that have been executed. As you can see, they've already hit their targets or initial beginning parts of their target zones. Now let's look at the British pound US dollar. So we've seen that there is dollar weakness going on, except for obviously in the US dollar yen. So for the pound, as you can see, this is making lower move lows once again today. Now this market has been slowly grinding lower for the past few months. It had been in a long-term uptrend trend that sort of plateaued. And now, as you can see, we've made a series of definitely lower move high for the major trend and lower move low, and we are banging new lows today. So considering we have weakness in the Swiss and in the Euro, and we have the new travel ban that has gone into effect with the EU, I think this is weighing on these European currencies. Now, the pound, obviously, they're not part of the travel ban yet. I'm sure there are some restrictions, though, because I'm sure they can't just like skip from the EU to the UK to the US. I'm sure there's going to be some restrictions on that. So as far as the coronavirus, obviously that is a fundamental driving this trade, and with the explosion in Europe, so we will see how things pan out. But obviously, we got to remember, when you make lower move lows and lower move highs, the trend is lower. The trend is your friend, and right now the pound US dollar is looking weak. The volatility has been so crazy. I mean, we went from having really tight ranges to, I mean, look at just this week alone, the pound has exploded. There's been more action in the pound. We've had almost a $10 move between the high that was set at right around 132.04, and today we're trading at 124.95. So that's right there a $7 move in the British pound just in 1 week. So anyone that was short and caught this bearish engulfing line sell signal the other day, boy, oh boy, did you capitalize on this trade, that's for sure. So, but these were wide ranges, especially yesterday. Anyone who hadn't been in the trade and already short, I'm sure that longs and shorts got chewed up like crazy, and that's probably why we're a little bit quiet today for this Friday. But who knows? We still may bury this market before the day is through. So right now, bears are in control. Bulls, don't try and catch a falling knife. Wait for a buy signal, and I would say wait until next week. Just stay out. There is no reason, unless you're short and have a good lead on this contract, because this market could open up $2-3 away from where it closes today. That's for sure. And which way that will be, who knows right now with this kind of volatility. It's very crazy. So now let's look at some other markets to stay away from. Australian dollar, US dollar, we have a potential buy signal shaping up today. We want to wait until actually we'll be actually the pause, not the buy signal, but the neutral signal today. But Monday, if we have a positive close today, and then we have another following positive day on Monday, then we will have a buy signal. But right now we are looking for it. It's potential. It's shaping up. But with this volatility, this thing is a bear. Counter trend trade right now is very, very rough with this kind of volatility. You've got to remember what your reward to risk ratio. Now, especially because the New Zealand dollar, US dollar is also acting just like this as well. So as you can see, the dollar strength is definitely prevalent in the Asian zone. This one didn't make a newer move low. Now, this is where we have some divergence. This is interesting. The Australian dollar made a lower move low. This one made a higher move low. So especially if this one settles higher on Monday as well, we have a good chance at this not necessarily being a bull, but riding a corrective move higher for both these currencies. So we're waiting to see what happens with that. So now let's look at the US dollar Mexican peso. This market has talked about volatility. We have a potential sell signal shaping up today. We're going to need confirmation tomorrow. Or excuse me, on Monday. So we will be monitoring this trade. Right now the parameters are super wide. You can see that just in the past week and a half, you've gone from 19 pesos to almost 23 pesos to a dollar. Very extreme moves, but we do now have a potential sell trade setting up in the Mexican peso. Dollar, Canadian dollar, this market. What do you do with this thing? It just is hovering below the highs that it made again yesterday. It tried to sell off today, and look at the bears just got smoked. So be very careful and mindful of this. I know there's a gap down here. All gaps get filled eventually, but it could be years before that happens. It could also be days. Who knows? But right now, if you're not long and already in this trade, I would say in front of the weekend, stay out, wait, and see what happens. Maybe if we settle negative today and then we have another negative day on Monday, we might be able to ride a potential correction to the downside. But we're waiting to see how that manifests, if it does manifest. Then we have the US dollar Turkish lira, which is just like the US dollar Canada. It tried to sell off today, and right now it's hovering below the highs. So we can see where we have US dollar strength is just, well, it's just here today, no matter what. So going into the weekend, there's been a little pullback, a little profit taking on the dollar early this morning, but now the markets are open. I'm watching CNBC right now, not to give them a plug because I don't really like to, but the Dow is only up 600 points now. It has been slipping. It was just around 800 when we started this webinar. It's coming back. European markets are getting to close. Let's see, Fed Treasury needs to do much more. See, this is crazy. The Fed has already done so much already, and so has the Treasury. It makes you really wonder, how panicky stricken these professional economists are, because the market you got to give the market some time. And I think the market's actually selling off now because of these actions. People are just they're really panicking because they think that this is not just preemptive, that the government knows something that we don't know, but actually no one entity or thing controls the markets. And believe me, there's no way that the government has foresight as far as where the markets are really going. That's for sure. But anyhow, we have a raging bull that has been stopped in the equity markets, and it's definitely making our dollar moves swing. So we've covered all of our trades that we're on, and we have some potential trades setting up for the new week. We will be covering those when we have our daily market analysis and trading live trading examples for you for Monday. But right now we have, remember, these 3 trades, these binary options trades, where we are greater than 104 quarter in the US dollar yen, greater than 93 quarter in the US dollar Swiss, and we sold the euro US dollar greater than 114 quarter. All 3 of these options right now are looking pretty good. We have the euro, we have the same positions going on in the outright Forex markets. As you can see, the euro is back on its lows. The Swiss is hovering kind of near its highs, and so is the yen. So we're going to ride these out and see how things go for the rest of the day. It's been a good trading week. It's been volatile. We've been nimble, and we are looking to end this week on a positive note. So it's always a good thing when that happens, right? So remember, we have those signals that we're looking to take advantage of soon. We have other signals that have all manifested themselves and hit their points. That's why we say don't chase these things. These things are already in the market, so don't try and get in the middle of a freight train when it's already in motion. And once again, high probable Japanese candlestick patterns available on Amazon.com in Kindle and paperback version. And you can utilize this book to Take advantage of the best buy and sell patterns used for over 400 years. Give yourself a competitive edge against the markets and take advantage of trades like this. If you would have read the book or you read the book, then if you could go back in time, you could take advantage of these signals that happened this week. But there's always signals coming up and going, and there's always opportunities, and we'll see what manifests, especially with this volatility. We're getting some nice moves to catch. So thank you very much for your time. You have a great weekend. Please subscribe to our YouTube channel, Forex Trading Unlocked, and check us out all the time at www.forex-trading-unlocked.com. Have a great weekend. Hello, everyone. This is Teddy Keckstedt from Forex Trading Unlocked, and we are here on March the 12th, 2020 with a daily Forex market analysis and live trading webinar for you. And we just want to pull up our disclaimer real quick to remind you that this webinar is for illustrative and educational purposes only. This is not any thing to try and get you to do any trades or follow our trades. Now, we have examples that are going on. We're showing you how we've worked the trades that we've been on for days and what have you. So these are things that are already in motion. You never try and chase anybody else's trades. So if you're not part of the signal and already triggered and managed when it's going on, then these are things that you are just watching to see how these things unfold. So with that, I want to pull up this real quick. We have some buy and sell signals that our trades were initiated with. They were high probable Japanese candlestick patterns, and ironically there's a book entitled that as well, available on Amazon in paperback and Kindle versions. And with it you can utilize the best buy and sell signals used for over 400 years to give yourself a competitive edge in all markets. Now let's get to the meat and potatoes, what you want here. We're at forex-trading-unlocked.com on the workstation page. We're going to toggle down to our chart. We're going to make this a little bit bigger for our audience. So let's get this centered. There we go. Okay, now you can see the Euro US dollar, as you can see, is pounded new lows. Is very volatile right now. The stock market's been open for an hour and it is swinging all over the place. The Dow right now is down around, 1,800 points. We have this bullish engulfing line sell signal, as you can see, that was triggered a few days ago. The sell signal is definitely in full-blown motion right now. So where is our target? Well, our target is down around this 111 into the 110.90 area, somewhere around here. So we're almost there to hit our initial target. Our extreme target is around 109.85 down in this area. So right now with this volatility, and especially with the new news about Europe being in lockdown from the United States as far as traveling to and from, that's a big deal for Europe for the next 30 days, because it means there's no tourist money, let alone the business money that's coming in. So that's a big thing that they rely on over there, and it is definitely not coming for the next month. So is this going to be a knee-jerk reaction? We shall see, but I would be very careful trying to be a bull in this market. As you can see, we're going to pull up. We are short the euro from 114.21. Obviously the market's at 111.60, so that's a good move. And we have our stop now lowered down to 112.70, which is a little over a full buck above the market right now. And with this volatility, that's the kind of extremes that you have. Our target price is 110 even. So we also have a long Swiss trade at 93.05 with the 93.70 stop in. We've been in this trade for a couple days. So now since it's positive, we've raised that. So both trades here are now winners no matter what, because we have our stops in place. We'll see how low. We're going to ride this trend and see if we can get a little more follow through over the next couple sessions as we wind down the trading week. So let's get back to our chart here. So you can see once again we have the sell signal in the Euro US dollar. We have that one position on. Also, we had sold the $1.14 quarter strike price in the binary options back on 310, which was 2 days ago. We sold it for average for the price of 35, short one, as you can see. Now the odds of the market getting back up to 1425, let's see, we'll put a horizontal line. So 1425 is right about there. Okay, so let's correct this coordinate. You can see how fast we do this live. You can do this kind of stuff on our website as well on our charts. So 114.25 right here. This is our option price that we sold. The market's here at 111.59. So unless it rallies all the way back and settles above this tomorrow, this trade here is pretty much locked in and good. Not 100%, but odds are right now this one is pretty good. And the US dollar Swiss trade, we'll go to that one next because this is where we had a buy signal. We had the strike price of greater than 93.25. So 93.25 puts us right here. Let's get this price right for us. So 93.25 gives us this strike price right here. As you can see, the market is above it. It's making new highs, and as long as it doesn't fall back and settle below 93.25 tomorrow, this option, which we bought for 54.50, will be worth 100. It's right now it's worth 87.50. So you can see we have about another 13 bucks on this one trade to go. And then we have, let's see, our target price for this market is right around the 95.5 to 96 area, somewhere in this zone here. Once you get above here, there's a heavy resistance, and we'll have to see how that pans out. But right now we have our buy signal, which is a counter trend trade. A lot of this could be due because of what's going on with European travel ban. We had made a lower move low. We had came back and made a lower move high. We pulled back again. We made a higher move low, and now we're making higher move highs on the intraday basis. So we are in a full-blown correction right now. We are not a bull, but we are in a bullish correction. So the buy signal is in full-blown swing right now and has about another half a point to $1 to go. We've already lifted stops, and with the volatility, we'll see if this really gets pressed on, maybe even through our targets. Because of the travel ban, maybe this might be the beginning of a super dollar bull going on against the European currencies. And here's a reason why I say that. The British pound US dollar has fallen out of bed today. Now, we've had some swings before in this market, but as you can see, it was going sideways. We made a lower move low, came up here, made a higher move high, looked very neutral, but the last few sessions, look at what's happening. And I think now that since the UK is part, even though they're not part of the EU, it's part of the European travel ban, shabam, all of a sudden pound weakness is coming into play. How far is this going to go? Well, that's a good question. Where's the next support level? Well, as you can see, we're pretty much bobbling on it right now. After that, it takes us down to this 122 area. So volatility is increasing in the pound, as you can see how the last 3 days have been versus all these trading days for the past 4 months. So very bearish to European currencies. I think those go with our buy and sell signal in the euro, the Swiss and the euro respectively. So these trades are being fueled by this. Will it end tomorrow or end today? Who knows? We'll see. But right now we're buffering against our target zones. So if you are a bear and you're riding this trade, I think you below 127.26 here, this last swing low pivot, I think that's your directional. Below that, I think the bears are going to be having their fun for a little while yet, and bulls, I think, are going to get slaughtered. Range traders, I'd be very, very careful with these swings that we have going on here. So I think if you're a range trader, trying selling into to highs would be better than trying to buy into lows unless you're taking profit. So just to see what else is going on here, we have another trading signal that we had this week, another bullish engulfing buy signal in the Japanese yen. Look at this volatility. This is absolutely insane. We came off this high, made this spike low a few sessions ago, came all the way back and gave us this bullish engulfing line the other day, and then we fell back yesterday, and then today, look at this, we spiked back, and now here we're riding this little area here. So we do have a US dollar Japanese yen at 104.25 binary option on, so that means that we are looking for the market to settle above 104.25 tomorrow. We can get out of this option right now. It is a plus. We bought it at 56.50. 575. Now, because of the volatility, you would think that it would be worth more, but because of this volatility, or it would be, because of where it's at, and we're with the time left, you'd think it'd be worth more, but because of the volatility, it's not where it's at. But as long as it settles above this, and as long as it looks like we're going to make a challenge of this 105.99 area, we're going to keep this on. And if we breach this point here, that would confirm after a higher move low, that would mean a higher move high, which would definitely keep our trade good going into the Friday's expiration, and it also give us a nice signal that this correction may continue going on into next week. So we'll see if it gives us any reason to get into a trade as far as the futures or the cash Forex contracts are concerned, but our options are about to run out of gas, and we do have expiration for the March futures coming up. So it's really tough if we're going to have any plays for that, because the pricing may be a little bit skewed, but just because of the nature of the rollover, which is going on expiration week next week. So now let's go look at the Australian dollar, US dollar. This market, boy, talk about having volatility this week. This one has us just waiting for a signal. I mean, this was Monday here. It set this high and this low, and now look at this market's looking to make new lows again. This is absolutely insanity. You got to have some deep pockets to trade this. I mean, the Australian dollar, US dollar just doesn't typically have this kind of volatility, and it's been knocking around. We have 63.14 as our lower downside breakout pivot, and 66.88 as our upside breakout pivot. We have a $5.50 range. Just from the last, just from this week's trading range to begin with. That's insane. That's a bigger range than we've had in any multiple months over. It's going back on the chart. So, but this also shows you that dollar strength is really coming in. It's raging, and this time I think the dollar is going to come back in a very, very big way over the next few sessions. Just to give you another indicator of how strong the U.S. dollar is, we have the New Zealand dollar, U.S. dollar, which is pretty much a direct reflection of what's going on in the Australian dollar, U.S. dollar, but you can see that they're not all the way on the lows. Mostly because Australia has more tied to China and a lot of the world economy. New Zealand doesn't have quite the issues that Australia does, but it's still riding that same direction. So we are definitely still bearish. Obviously, you can see as the market's riding support. I'd be very careful trying to be a bull in this market or trying to pick a point unless you have a very valid sell or buy signal. But otherwise, right now, I would look to sell rallies, and if you're a range trader, also look to sell into highs and then take profits on new move lows as we slide. Now, as far as how wide this trade is going to be, you can see how wide it's been this week. Don't be surprised that we swing around like crazy in this. I mean, the volatility is up in the currencies, so your risk-reward ratios have to be expanded, and if you don't have those kinds of pockets, you either wait until volatility calms down and the environment is suited for your capital, or you just make sure you pick your trades, take only the highest probable ones, and make sure that your risk is limited to the most, and be very capital conservation is very big in this type of environment. You know, there's lots of opportunity, but this is also an opportunity to get blown out. A lot of traders, especially on Monday, that had positions long or short, you can't tell me that they didn't have a tough day on Monday. I don't care how long you've been trading or how little you've been trading or how much money you do or don't have. Odds are most people got destroyed on Monday if they were trading on any side of the market. So take that and be very mindful of that. We always want to err on the way of caution when it comes to the markets. So now let's start to look in another trading zone, North America. Since you can't go to Europe from the United States and you can't go to China, well, you can go to Mexico, and I'll tell you what, this is crazy. This peso, like a balloon underwater, took off when it was at 18.5 just literally 3 weeks ago, and now it was pushing 23 pesos to the dollar. So anyone that's going down to Mexico, even if you're just going down for the weekend, you know you're going to get a cheap flight because nobody's flying. The resorts, I'm sure, will love to have you, even though it's spring break. I'm sure there's a lot of cancellations because of people's fear of the coronavirus, but I think the only coronavirus you're going to get down in Mexico comes in a bottle. So, but anyhow, this is also a market that's not for the faint of heart. I mean, look at the range today. We had a low of, what it was at 21.34 pesos and a high of 22.94, almost 23 pesos to a dollar. I can't imagine what they're looking like at the bank when it comes to the exchange rate. That's for sure. Of course, if they're going off of yesterday, then they would be definitely getting a deal for those that are selling the pesos. So, but yeah, so anyhow, we are a bull in this market. The dollar is very strong, as you can see in every market that we've looked at so far. Now let's go just north of the border from the United States and see what's going on in the U.S. dollar Canada. Now this market, Jesus Christ, every day this week has touched new highs. We have this gap here to fill from Mondays, from Friday to Monday's opening, that little explosion that just lifted this market into newer move highs. I mean, it's pretty crazy. Just the low of the week this week is 135.17 and the high is 137.73. That's just this week, let alone the close of last week was 134.20. So 134.20 up to 137.73. I mean, that is just a ridiculous explosive move. Talking about strength in the U.S. dollar, the U.S. dollar bull is out there. Let's look at the Dixie real quick. You can see that the dollar index, as volatile as it has been, has had a turn for the better as of the last few sessions. 3 days ago, it pulled new lows down at right just above 94.5, and now the dollar index is screaming higher. So let's go back to the Euro US dollar for one last look to see how our trading signal is manifesting. As we were talking, the trades were reinforced, and here, yep, we're back towards the lows. So we're riding this bear. We're going to see what happens. Remember, we will be getting out of our options trades tomorrow. So far, we're looking really good in all of these. We will see. We'll check out tomorrow and see where the values are. We don't have much left to go in these trades, so if it does seem like there's going to be a turn on the dollar, we may just liquidate them and take the money and run. You know what I mean? So don't remember, pigs get fat and hogs get slaughtered. And right now, I'll tell you what, with the Dow being down, what is it, 1,800 points right now, there's a lot of sheep and pigs scurrying from the thunder. So ride the lightning, and you'll have lamb wrapped in bacon for dinner. All right? So just keep that in mind. And also, if you want to learn how to trade these signals, once again, high probable Japanese candlestick patterns available on Kindle and paperback on Amazon.com. You can utilize the best buy and sell patterns used for over 400 years to give yourself a competitive edge against the markets. And then you too can have binary options trades and Forex trades and futures options trades. Pick the right ones at the right time to capitalize and take advantage of trading opportunities as they come. So with that, I want to thank you very much, and always subscribe and follow, and share us around the internet on our social media links, as well as check us out at our website, forex-trading-unlocked.com. You have a great trading day, and definitely be mindful of this volatility and use caution and pick your trade. Hello everyone, this is Teddy Keckstedt from Forex Trading Unlocked on March 11th, 2020, and we are here with a daily Forex market analysis and live trading webinar for you. Before we get into our markets and trades for the day and our signals, we actually have a bunch of signals that were triggered yesterday. So we want to just have our disclaimer up here to remind you that this is for illustrative purposes only. So with that, we're going to go now to our, actually before we get into it, we're going to talk about some buy and sell signals today. They're high probable Japanese candlestick patterns, and if you want to read about them, you can, the title of a book is High Probable Japanese Candlestick Patterns, available on Kindle and paperback on Amazon.com. So with that, let's get into our live action screen here. We have the forex-trading-unlocked.com website pulled up already with our workstation page already pulled up. Let's make this chart just a little bit bigger for you. So here we go. And all right, here we have the US dollar, Turkish lira. Why are we starting with this? Well, we have some signals, and we're going to concentrate on the majors in a few minutes, but we want to first get to showing you where dollar strength and dollar weakness is. We had a signal in the dollar index yesterday, so and we will get to that in 1 second, but I want to show you, see how this volatility of this Turkish lira is. We have US dollar strength re-emerging, and this is very important. We've come off a higher move high. We've set a higher move low in the grand scheme of things. So this trend, the bull seems to have returned. Be very mindful of this. For those of you that trade this, you need deep pockets for this one. So since we mentioned the dollar index, let's bring this over here. As you can see, the dollar index yesterday had a very, very big bullish move. Just between Monday and the volatility, I mean, basically the dollar index is only slightly higher on the week, but the thing is that the volatility it has had is ridiculous. So speaking of volatility, since we started out with our lesser currency crosses, we're going to work our way into the stronger ones. US dollar, Mexican peso, look at this, the volatility it's had just in the last 2 days. I mean, it is just insane. I mean, on Sunday night, it opened up and screamed all the way up to 22 pesos, fell all the way back down to this 20 pesos, 20.29, and now look at this, it's back above 21 pesos to the dollar. So we have some wide parameters here. This is just an indication showing you, once again, dollar strength is coming back. So the dollar index short-term turn that we had yesterday is getting followed through with our minor currencies. US dollar Canada. Now this is another raging bull to talk about gapping, opening. on Sunday night and needing to fill a gap. Now, right now, it seems to be struggling a little bit. It was positive today, but the range is pretty tight. I mean, considering the volatility, all of a sudden it's going back to a normal little tight little U.S. dollar Canada range trade. So we have a gap that needs to be filled here. Right now we're keying off of our high of yesterday at around $1.3802 as our breakout level to the upside. Dollar strength still is here. We do have a gap down here. I mean, this volatility just this week alone is insane. I mean, we settled last week at 134.20, and we're talking at a high of 138.02. So almost a $4 move in the U.S. dollar Canada just in the past few sessions. So we are waiting for a signal here. We do not have one here. So now we are going to get to where we have a signal. So we have one in the U.S. dollar Japanese yen. Imagine that. This market has tanked over the past 3 weeks, as you can see. Now, we have had a buy signal yesterday. We have right here, this is called a bullish engulfing line. It was confirmed, and right now we have a better buying opportunity. We filled this gap that was here from the weekend, and now today, as you can see, the market had gotten hit a little bit, and now it's trading right in the middle of its range, and our buy signal is in place. Now, we have wide parameters here because of this volatility. We have an initial target zone of here 106.66 up to 107.99, and if we challenge this 107.99 pivot, that's actually a good sign that we actually may hold a neutral to higher posture for a little while with the U.S. dollar yen, just because this is a key pivot area. And then we have this 108.45 area, which if we breach this, this was the area that had contained the initial was very big resistance. If you go looking back around the marketplace, it's been an area where there's been lots of support where the market has fallen back down onto and bounced. So the question is, will it bounce off of this or will it propel it above it? So any trading above it definitely would have us very bullish again, at least in the short run. Now markets, they go out like they came in. So let's just say that we have a short-term turn in the market, and if that is the case, let's move this over here, make this a little more clear. So let's say that this turn happened 2 sessions ago. Yesterday's buy signal confirms that a short-term bottom is in play. Well, there's definitely a short-term bottom in place now. That's not even a question. So, but it's a major lower move low after a higher move high, which has this market actually in big neutral. So for the market to correct back up into this area that we're looking at, that's not really outside of the realm of possibility. Well, it's definitely not outside the realm of possibility, but the probability is definitely leaning towards that it will inch higher. Now, does that mean it's going to happen this week? No, not necessarily. This could take a week and a half to manifest with this volatility. If it dies down, I mean, look at how it was trading before all this stuff happened a few weeks ago. If we start to fall into a trade like this, we start chopping around, we could just go drifting here below this 108.45 for a while. So right now we do have a buy signal on extreme volatility. So our parameters are pretty high, so this is not for the faint of heart. This is probably an options trade, which we're going to get into right now. So that's what we've done. We actually we put the binary option of greater than 104.25. Okay, so what does that mean? So for those of you that are not familiar with binary options, we're going to put this right here at 104, and we're going to adjust this, the coordinates to 104.25. So what does this mean? So this line right here, which we just put, I'm going to make this a little bit bolder. Okay, so this here is our strike price at 104.25. So right now the market is currently above this. So this market, this position says U.S. dollar Japanese yen is greater than 104.25. It expires in 2 days. As you can see, we put the trade on today, earlier today. It expires on the 3rd. Is the 11th. It expires on the 13th. Currently, it is slightly higher. That's because there's a rally going on in the Japanese yen right now. So when the market was slightly lower, we gotten into the trade. This is our strike price. Now, as long as the market stays above here at any time, we'll be able to get out of this with some value. If the market closes on Friday and we let the option expire, then we get the full value of the profit. Only if the market falls below the strike price of 104.25, Do we have a loss? And definitely if it closes below there, then we lose our complete. We already know our risk though. So our risk on this trade, oops, we're going to the wrong position here. So our risk on this trade was the average price here was 56.50. So that was our risk, and then we have the potential to pull in 100. So just make around 80% on the position if it's a winner, and if we lose it, we know exactly what our risk is. It's capped. We're only buying time. So now we have another trade that we're looking at here. We have a Swiss franc long, and the reason I brought that in is because since we have this buy signal here, let's go into our next buy signal. This is our segue. So we have the US dollar Swiss, which has been selling off big against the dollar for the past a few weeks. Now we've had a bullish engulfing line buy signal here as well, and as you can see is today, earlier the market had been falling lower. This gap from the weekend has been filled, and now as we are speaking, the market is rallying and hovering just below its highs of the day and where it opened up yesterday when the trading session started. So this is kind of big. We have a lot of bullish momentum. Remember that the UK, the Bank of England cut their rates, so this is probably fueling what's going on in the European currencies. We have this target zone of 95.20 up to 96.02. This is a very viable correction area. That doesn't mean that we're saying that this market is a bull. If anything, we are looking for a corrective move higher before the US dollar Swiss franc takes another nosedive, because we're really bullish the Swiss franc, and not just because it's rallied so much in the past 3 weeks. We were just surprised actually, or that it actually hit so far, especially in the past few sessions. And now as you see, we're back into this area where if you look back, this is where the gravitation, most of the trading has occurred over the last almost week. But because of the weekend move, that really just touched off volatility in a huge way. So we have our buy signal. We know where our target is, and our risk is the low here of 91.74. Any failure from here definitely has us on the bearish side and out of this signal. So since we already, the market has coming back like it is right now, we will wait the next couple sessions. And then we will start to, once we hit the 95.20 spot, we'll definitely start to raise our stops to break even and a little upside, looking to press this move up to this 96.02. So that's how we're looking to work that trade. Now we have another trade to look at. We have the Euro US dollar. There's the big one that everybody's always looking to hear. What's Teddy going to, when is he going to talk about the euro? Why doesn't he talk about that first? Well, I sometimes do, but I wanted to save one of the best trades for last. This market has not seen volatility like it has over the last 3 weeks in over, well, definitely well over a year. This is a very big deal. So, I mean, when you think about it, the Euro US dollar has had range, just yesterday alone, had more activity in it than it did in any probably 2 to even upwards of 5 day period any time over the past like 3 months, especially because the market was trapped in a $3 range. So we have this bearish engulfing line sell signal that has hit the market, and we're wondering, is this going to continue? You know, that is the big question. I think that the volatility definitely is here. The sell signal we had, now if you look at the trading from today, the market tried to rally. It didn't work out for things. It just didn't happen. And now look what's going on. We have another, we're making new lows as we speak. So right now our sell signal is looking good. Our target zone is down to 111.40, down to 110.52, somewhere in this area. This would be a nice little bottoming area for where the market has been trading basically for a long time. So if it settles down in here and starts to chop around, well, that would look a lot like it did for months on end before we were heading into the 2020 and the new year. With this volatility, look at what we've seen. We started out the year, we came down, we were right, actually the beginning of the year was pretty much right in the middle of the range of what we've had trading just over the last 3 weeks, which is insane that the market eroded like it did. It took a month and a half to get down to make this low, and then within 3 weeks it's gone all the way escalating up to $1.15, where it has not been at that market level in a while. So anyhow, we have this target zone. Once again, this is where we're looking to hit over the next 3 to 10 days. And as far as positions, we do have a long from 114.21. We have our stop in at 113.80 right now. When we have a target price of, let's see, we're short from 114.21. We have and then we have a target price of 110. We already have our stop loss in at 113.80, and that's because we've already been in this trade and caught already such a move that there's no reason not to make sure that this winner doesn't turn into a loser. So, and now we will keep it where it's at and let this trade run. We also have the Swiss where we are long here at 93.05 with a stop loss at 93.20. We have a positive position on that one. That's for the MT4. So for MT4 traders, you're familiar with that platform. And we also have the Forex.com web trader up too because we're partnered with them. So we want to use this one as well to show people how this works. And we moved our stop up here. We're long from 92.64 and we have a stop in at 93.02. So this now, no matter what, is in as long as it's not a week held over the weekend. It hasn't moved like it did on Monday. This stop will remain a winning trade, and we will continue to raise it as momentum goes higher. So we have those signals so far that are all going together. It's kind of nice that we have this big bounce that obviously happened in the dollar index. Now think about it. The euro US dollar is the biggest component of the US dollar index. We have the dollar rallying in a bunch of other the minor crosses like we showed earlier. And now here, look at this. Talk about volatility as well. This market was a grinding bear for months. And then just in the past 3 weeks, came off lower move lows, made a higher move high, and now is right back in the middle of it, back underneath this downward sloping trend line that it took out before. So now, if anything, really what's going to happen is this line goes to here now. This becomes our new trend lower. So the question is, do we go back up to challenge resistance, or do we go back to test support? Well, right now it looks like dollar strength is coming into the market, especially versus the other currencies. Remember, coronavirus is becoming a big growing problem once again. We're starting to get real numbers now because the rest of the world is much more transparent than China. Now we're starting to find out how much they really covered up and were caught off guard, one of the two, back in the fall. So we'll see what kind of an impact it's going to have. The UK, remember, they just cut the rates half a point, or I'm not sure if it was a half a point. They cut the rates. I was in the middle of another meeting, so I don't know exactly what the number was. But we've had a nice little swinging action going on for an afternoon trade for the currencies. Right now for the pound US dollar, we have the 132.01 upside pivot and a downside pivot of 127.16. In between there, this thing isn't a wide range trade. We have no grasp on this one because it's been pretty steady for months on end going sideways, and no matter what, it just doesn't seem like it wants to. I mean, look, it rallied really nice for a week and a half, and then all of a sudden yesterday, shabam, it just took out 3 days worth of trading in the past like 24 hours. So not much to go on with the pound US dollar. We have not covered the Australian dollar US dollar. One of the reasons why is because with the volatility this has had, is what do you make of this? I mean, it set a lower move, it made set a higher move, lower move high and a lower move low, all within the course of a day. Now it's stuck in the middle of the range. I mean, we have 66.86 upside and 63.14 to the downside for our breakout pivots. Everything in between right now, I would say this market overall is bearish. The trend is definitely lower, and maybe we can use the we'll take the high from this beginning of this move, and we'll come down off of this recent lower move high and set that as our trend base. So maybe, I guess, we get a violation of this downward sloping trend line, then maybe, well, even still, they could just be neutral. This market, look at with this kind of volatility and shakeup. I mean, can you imagine nobody could have done well on this day? Every long and short had to just gotten just completely chewed up. Unless you started out flat and were fast and nimble, I don't see how anyone could have done anything but gotten hurt on this day. So, and hopefully no one got too hurt on it, because we definitely don't like market moves like that. So you always have, that's why you always have to have discipline with how much you're trading with as well. So the New Zealand dollar, US dollar looks very similar to the same trade in the Australian dollar, US dollar, doesn't it? So yes, it does. And what do you do with this? This is the same thing. We have super wide parameters here. I would use caution and wait for a setup. These extremes, are they erroneous? No, they're definitely not erroneous. Do they mean something as far as major support and resistance? Well, everything always means something. I don't know. Right now, I think the upside part is more solid for this point here than this lower area. I think that was a bit of an extreme, but it could also be an indication of where we're going to be in the next month or two. So who knows? Maybe that this low here which has been set. Now we had a lower move high, lower move low. As long as we don't take out that lower move high and we make another lower move high, well then I think we're going to head back down towards this 60-cent level. Am I very bearish this market overall? Absolutely. Right now, I think that it has more of a chance to continue lower than to go sideways. So this will be one of our big indicators. So I think the US dollar yen is something that you're going to start to see flight to quality in that market. So stay leery of looking for correlations in the Asian currencies right now because we have divergence going on in a couple different currency crosses. So once again, we want to review our trades. We have the US dollar JPY. Where we have a buy signal. Ironically, that we have a high probable Japanese candlestick pattern right here, a bullish engulfing line that is now targeting this upper area. So just like we started off this webinar saying about the book, High Probable Japanese Candlestick Patterns, to check that out. You can learn how to trade these patterns if you read the book on Kindle or in paperback version. So right now, our target zone once again is we are bulls looking for a challenge of the 106.66 area to 107.99, somewhere around this upper band right here. This is our first buy signal that we covered today. Then we have the US dollar Swiss as well that has given us a buy signal. We have a bullish engulfing line just like we did in the yen. This market as well is giving us an upside target zone of 95.20 to 96.02. And then we also have in the euro US dollar, where as we were covering that market, it was making new lows. We'll take a look at this last to see what's going on here. We have this bearish engulfing line, and yes, we are hovering below or just above the lows. And let's see, we also have just taken out the pivot from yesterday. We were looking for yesterday's low to be a downside pivot. Breakout for the bears, and this is definitely triggering that, what's for sure. So now we have our sell signal is reconfirmed by us making newer move lows on the as we were talking in this webinar, and our area that we're looking to target is 111.40 down to 110.52. This is still a nice little sell-off area, and for a downside correction into this area, it's very probable that you can get this type of momentum to breach down into this area. Now, does that mean we're going to plow through it and continue lower? That remains to be seen. Right now, we are a short-term bear. We're just working to signal. This market has rallied so extreme in the past 3 weeks, more so than it has in over a year, that we have to look at this as a corrective move. Right now, we have a sell signal, which helps us to confirm the fact that the euro US dollar is set up for a potential correction right now. That's why we are short. We're working these trades. You saw that we are short here for the euro from 114.21. Our stop is in at 113.80 because the market's already at 112.73. We'll definitely be dropping our stop as of the close of today. Once again, our US dollar long here, we have at 93.05. We have our stop in at 93.20. And we will see how that trade manifests also, where we will be moving that stop up as well. And then we also have, remember, we have our yen trade on where we have the 104 quarter, which is, and that's the big thing to remember for this trade. So for the, we have the outright Forex trades for the euro and for the Swiss rather, and then for the US dollar Japanese yen, let's look at this binary options level once more to show you how at 104 quarter right here, this is, as long as the market stays above this, our position will stay in the positive. So we're hoping that that one works out as well over the next couple days. And just to remind you, if you want to learn about how to trade these signals that we were talking about, they're covered in the book High Probable Japanese Candlestick Patterns. I highly recommend it. It's available on paperback and Kindle version on Amazon.com. And through it, you can utilize the best buy and sell patterns used for over 400 years to give yourself a competitive edge against the markets. And with that, we want to say thank you much. We had a very interesting week so far. Thank you for coming back to find out how whether or not the signals did occur. Remember, yesterday we were looking at a bunch of these to possibly manifest. They did. Now we have trades on. We're working them. Remember, don't try and copy what we're doing or follow it. We're already in it. You're not managing it or knowing when to do it. If you're not hooked up to our signal service, you are not supposed to even think about it. So, but we're giving you some good education and ideas to look at what's going on with the market and see how we're managing it. And then if you want to know, then you can get more involved later. So thank you very much. Please subscribe to our YouTube channel, and good luck with all of your trading. Hello everyone, this is Teddy Keckstead from Forex Trading Unlocked, and we are here on Friday, March the 6th, 2020 with a daily Forex market analysis and live trading webinar for you. And we're going to pull up our disclaimer real quick just to remind you that this is for educational and illustrative purposes only. That is it. Okay, so now we will get into our webinar here at forex-trading-unlocked.com. We're on the website. We already have the workstation page pulled up, and we're going to skip past the numbers, even though there are some big ones for the Japanese yen coming out yet still today. The big news is the dollar's getting crushed today. I mean, this is the second Friday in a row where it seems like Friday, and especially as the other markets are closing and done for the day, the U.S. markets are just terrorizing the currencies. So the dollar is getting crushed. Like, I mean, look at this. We have the euro is back at 113.46. The low today was 112.11. So that's just crazy. Like, we've not seen this kind of momentum, volatility, or ranges in the euro in, I mean, it's been very, very long time. So it's going to be very interesting to see how this bull progresses, because it just doesn't seem to want to let up. We've had one down day and one neutral day in the past 3 weeks, and this is quite the rally that we have going on. As you can see, we came out of this range that we were almost pretty much in for. I mean, look at this, from October, let's see, the middle of October, the beginning of October, all the way until even the beginning of February, we were in a range where we were from 109.5 to 112 even. So you're talking about not even a full $3 range. And then since then, after we had this nice little drop off, I mean, we're looking at the low from on February the 20th of what is it, 107.77. So that's quite the rally that we have going on here. We have almost a $6 rally from the bottom. So this is we have not seen this kind of action in this currency in quite some time. And remember, the euro is the biggest component in the dollar index. That's why the dollar index is obviously inverted and looks like kind of almost like the opposite of what this chart looks like. So our key pivot is $1.1096, which is quite a ways back with this volatility. It could be there in a day, who knows. But everything above here keeps this market in a neutral to bullish posture. We are no longer on a bear campaign. It doesn't really make sense because the fundamentals for the euro are very weak, and especially with their economic numbers. There's nothing to really support the euro to have it going as high as this is. Is it an overdone move? It's hard to tell, because with the coronavirus, you would think that this, especially with what's going on in Italy and throughout the EU, that you would think that this would not have quite the support in the euro that it does have. So right now we don't have a signal. We've already ran out of our long trade a while ago, and we are just watching this like a balloon underwater rally going on. This is crazy. So for all of you aggressive bulls that have been able to hang on and didn't get shaken out in this little spot here, I mean, who would have thunk it that this that the euro would be trading here at 113.38 as we're talking right now. Pretty impressive, the strength of this market. Now let's go and look at the other European currencies and see how they're faring today. Another sign of strength and another big component of the dollar index is the British pound US dollar. And as you can see, this market has been in an overall uptrend for a very long time. Last 4 months pretty much sideways. In the last few months, it's been in a sideways to lower trade. Now we have made progressively lower move lows and lower move highs. We have now taken out this downward sloping resistance, keeping the trend intact, as well as having taken out this last lower move high. So now we have a lower move low followed by a higher move high. Does that mean that we're bullish the pound? Not necessarily. What it does mean is we are definitely on the neutral path. We're not so much bearish anymore. Maybe a good solid base has been found, and we will maybe just see a very big wide range trade for a while here. So I wouldn't be too aggressive as a bull. However, right now you are in good shape. Bears, I'd be very careful selling into this rally. We definitely have crossed a barrier here. When the pound gets volatile and the pound starts moving, You got to be definitely, and it trends very, very strong. So you have to use a lot of caution selling into counter trend moves. So what I would do is, if anything, wait for a sell signal before you start to look to become bearish on this one. If you're long, then I would say look at this momentum. I mean, we have, today we opened up, you barely even spiked a little bit lower than the open. So it's a lot of buying momentum going in here in the British pound US dollar. So is it the dollar weakness that's happening, or is it all of a sudden strength coming into these other currencies? I think that right now we have dollar weakness. I think it's a reaction and a reflection of what happened with the Fed's interest rate moves a couple days ago, and the overall market absorbing what is going on. And then we also have to look at this little gem of a European currency, the bull of bulls, is the Swiss franc. I mean, this market has been a bull against most currencies for quite some time. The dollar it struggled with for a little while, and now over the past few weeks, it is just unwinding. I mean, we have volatility in the euro, but this is a big move to go from a high, what was this, of 98.48, and now we have a low today of 93.18. That's a big move in the Swiss franc. A lot of strength. And the question is, do you want to be a bottom picker here? Absolutely not. If anything, we have a sell rally forecast. Unless you have a very valid buy signal, I think you should use a lot of caution trying to buy into this. If you're going to trade against the lows, I guess that's what you do. Take an aggressive stance, but I would use caution and be very mindful of the fact that you may not get much of a bounce yet. This bull, or for the Swiss, that is, bear for the US dollar Swiss, is quite aggressive and doesn't seem to want to let up right now. So we'll see what happens over as the close comes this afternoon, giving us an indication of how next week will behave. And then we'll see also what goes on with the coronavirus and also some other things that will be shaping up next week. But right now, the momentum for a second Friday in a row, this is absolutely crazy. Because here's Friday, Thursday, Wednesday, Tuesday, Monday. Here we were last Friday. We were trading just below 97 cents, and now here we are at 93.40. We've had quite the drop in the past just 2 sessions, let alone this week. So be very mindful of this momentum and be cautious if you're trying to trade the counter trend. And for you bears, well, just keep lowering your stops and ride this wave. Who knows when it's going to end? But right now, absolutely be cautious trying to be a bull. Another market where flight to quality seems to be going is the Japanese yen. Look at this one. If there's a market that's gotten hammered, it's this one, the volatility, and this is craziness. If you look at how the rest of the yen had traded for months on end, and then literally in the past 3 weeks, since the middle of February, or the last middle to end of February, we have just been swinging and swaying without a doubt. I mean, even on an intraday basis, the yen has had it's fooled the bulls and fooled the bears, and I'm sure that even along the way down here, except for those very patient bears that have held on and had their stops pretty wide in the initial break, I think some bears may have had some trouble with this move. Maybe there's been some people that have picked it off, but I think there's been plenty of opportunities to have sold this market in the whole, taking a lot of heat, unless you have deep pockets and are risking way too much more than you should be for your potential reward. I think they got chopped up. So that might also be one of the reasons why we've gotten so volatile, is because as this momentum does build and people don't adjust accordingly, all of a sudden all the tight traders that here for months had very little risk on whether they bullish or bearish, all of a sudden here, probably over the past, especially week and a half, 2 weeks, probably didn't fare so well. So right now, wait for a signal if you want to be a bull. If you're a bear, keep on working it. Right now, we just don't have anything to say. The volatility is so extreme. We're heading into a weekend. We don't want to go long or short into the weekend or initiate a position unless you really have a good idea of what you want to do and it's part of your plan. And right now, we don't have a signal, and we definitely want to see how the weekend shapes up. Very violent move in the dollar after the dollar had been so strong for 6-7 weeks almost. And in the past 2 weeks, we have had quite the reversal of fortune, especially in some currencies where, excuse me, the US dollar, Japanese yen, had been a bull for so long, and no matter what the dollar was doing, even when the dollar was weak, the yen would sell off for a little bit and then all of a sudden reverse gears. Like that was what was going on during all this period here, especially back here at the in the end of 2019 when the dollar was getting, it was definitely under pressure in November and into December. So, and this market kept on grinding higher, and no matter what, dollar weakness would come in, and the U.S. dollar yen, boom, it would rain. So what can we do with it? Like I said, we're going to have to wait for it to close today and then look for a trade in the beginning of next week. Now, one indicator as to what is going on here, there's markets that are starting to catch up. The yen has obviously had strength versus dollar for quite some time. It's starting to be reflective in this trading zone. Now, the one funny little thing about this is that the Australian dollar right here, if you look at this last swing point here, this last lower move high around 67.54, and this low here at 64.30 from this little correction we have going on right now, this pretty much puts us into our target area for a correction from that little slide just for that wave down. Now, if you put it all with this last higher move high back here at the end of 2019 and then bring it into this low here, well, then we have an upside target for a corrective move right around our pivot here of 654. So with the yen constantly battering lows and the U.S. dollar obviously being under siege, some aggressive bulls right now, you might be basing and have yet another wave higher and get a challenge somewhere near that 67.54. Not that we're overly bullish on this market. The thing is that right now the trend is definitely lower. This is being to be considered a corrective move higher right now, but the momentum should run out of gas right here if this trend is truly strong. Now, if the yen, that trading zone, starts to balance out and there's actually more than just a corrective move, well, that would help to give lift to the Australian dollar. So for range traders, I think you got some good opportunities, especially buying into lows and selling into newer move highs, because I don't think really push on like the yen, like how the yen is hammering support. I don't see Australian dollar just piercing resistance in a very, very big way. I think it's going to be a grind. And just to give you a little bit more of a clue as to how this trading zone is working out and how this trade is working out, let's look at its counterpart. Now, the New Zealand dollar, U.S. dollar, doesn't have such the fundamental weight going on as it does in Australia. This market also is pretty much reached its target from where this last swing lower move high to this current low is. Now, if we have, once again, this last higher move high up here back at the end of the year down to this low, that also puts us into this target zone right around this pivot of 64.90. So we have a little bit of tandem going on between the New Zealand dollar and the Australian dollar when it comes to the U.S. dollar. And if we're going to fail, we're pretty much in that zone. So I think you're going to get a lot of your a lot of bears start to jump in and start selling into this current region where we're at right now. Now the question is, will strength prevail or will short selling prevail? If, like I said, from the recent wave lower, if that holds, then yes, we're going to probably see this the New Zealand dollar as well as the Australian dollar start to stall. Now, if the U.S. dollar yen all of a sudden gets a bounce and begins to rally, that will probably have an impact on these two currencies that we're looking at. And then I think you will see a very quick turnaround. So I would say right now, instead of using the dollar index for an indicator, if you're trading the New Zealand dollar, U.S. dollar, key off the U.S. dollar yen. As they continue to hit support, I think this is going to continue to rally and pressure resistance. If we get a buy signal in the U.S. dollar yen and all of a sudden there's a halt on that trade right there and a turner of events, making it bullish again, then I think the New Zealand dollar, U.S. dollar for sure is most likely going to resume its overall trend, which is lower. Now remember, this market was in a nice bull market for a while. The coronavirus has definitely been one of the biggest impacts that has driven this market lower. If the coronavirus impact is not going to be so severe globally and what have you, then this market has a really good chance at getting back up and continuing a very overall bullish trend in the long run. But we have to see how that's going to pan out first. I think we're right now, no matter what, for the next 3 to 6 months, until there's any real reinforcement by economic numbers saying that the coronavirus has not impacted trade and the markets as much as the fear, if you will, has, then we will have a whole different story to look at. But right now, we are still looking to find weakness no matter what. Strength right now doesn't seem to be able to be something that can sustain itself. But you never know. Right now, the markets are trending very strongly the way they are. Now let's look at the U.S. dollar Mexican peso. We have a lot of kids going on spring break from the U.S. And look at this. Once again today, the market rallied higher. Okay, now this is actually significant here. The U.S. dollar is back at 20 pesos to the dollar. It was trading right around 18 half to 19, or excuse me, 1860 back here. Just, what was this? 2 weeks ago, 3 weeks ago. What a big rally. I mean, this market had been grinding lower and grinding lower for months on end, and this thing just has exploded. And even the last two sessions, this market doesn't typically have this kind of volatility, this kind of strength. All I can say is there's some very, very big selling pressure in the U.S. dollar. And this thing, the funny thing is, while the dollar was strong, this market was actually, or excuse me, when the dollar was weak, this market was strong. Now the dollar is getting hammered again, but not against the U.S. dollar Mexican peso. It's crazy. So right now, if there's any strength in the dollar, it's against the Mexican peso. What do we do with it? I don't know. Right now, this is just, the swings are so wide, the volatility is so crazy. If you're not already a bull in this trade, I say you just have to wait for a setup. So we don't have much to do on that one, especially going into the weekend. So if you're already flat, guess what? I think your day is done for the day, and also you can start the weekend because there's not going to be any real opportunities. And I would stay out trading nonsense with this as the U.S. markets are closing. All right, now we have this market here. We have the U.S. dollar, Canadian dollar here. And we have two purple lines here, and you can see the market is trading right here at 34.27. The reason we have that highlight is because we still have our options on that expire in 4 hours. We have the U.S. dollar, Canadian dollar is greater than $1.3375, and the same currency cross is greater than $1.3425. We are short these options because we had a sell signal that still is intact. However, with time not going on our side anymore, we may not be able to see a profit in both of these options. Now, right now, we are right at the 34.25 strike price. If we settle below, obviously, any of these price strikes, since we're short, we will be a plus in the trade. Right now, with where the market's at and the strength that's holding up, it looks like we are not going to see that profit. So it looks like we may be seeing a loss on this trade. We also have the short in the currency cash also from $1.3335 and $1.3409. So we are still short these. We had the better opportunity from the sell signal here that we had at the what was it back on? What was the date for this sell signal? On March the 2nd. So that was 4 days ago. And we still have not taken out our risk here at $1.3464. So our Forex cash position may still be okay. We'll see how it handles the weekend and today's trading, as long as we don't get this rally above here, because once we pop this point, we'll be stopped out. But the sell signal is still intact, so we're taking some heat on two positions. The options, we're going to run out of time today, so we'll see. Maybe we'll get a slide this afternoon that brings this market back down towards the lower strike price, and we'll at least get kind of a wash on the trade. So right now, we have these. Let's see, we have 4 hours and 28 minutes left on this position. So we'll see what happens, but it's not looking too good for our binary options positions today. So not as good as last week's were. But we do have some key pivots. We've been making higher move highs and higher move lows. Our sell signal here is the one thing that would set us off and give us newer move lows, especially, and if we get a turn now and our at least our Forex position in the outright cash becomes profitable, that means that this market is back towards these lows and making newer move lows and taking us off the rally campaign. Now, the U.S. dollar is failing against all these other currencies. You can see it's stalling versus the Canada. Obviously, with the peso, it's like a balloon underwater. But as a whole, we're not getting very much support for the dollar today. You can see that we are now here an hour after the stock market is open. The equity markets have been swinging around crazily this week. And the dollar has been just under pressure, especially under the major currencies, the pound and the euro. Once again, let's take a look at that and see where that is going since we started out the webinar there. And as you can see, off those highs since we started talking at the beginning of this webinar, we've come back every bit of, let's see, we were up by 113.40, so we've come back a nice little way here. So it looks like the dollar is starting to see a little profit-taking break right now. Could be just a short-term reprieve for a little bit before it makes a run for newer move highs. So we'll see what happens. But it has been quite the run-up. So for any long-term bulls that have been in this market, especially going in front of the weekend, and with, like I said earlier in the webinar, the euro has fundamental reasons to be lower than up at these levels. So we'll see how this pans out and see what's going on. And we'll take a look at one more market real quick, something we've been watching for the past couple weeks. The U.S. dollar, Turkish lira, it's just bobbling around here, and the dollar doesn't seem to be getting after the dollar had quite the run against the Turkish lira even today, while other markets are also hurting the dollar. So is the Turkish lira. Not quite like the other ones. It's not making newer move lows. I think overall, this one here, you have to be careful being too much of a bear. I think that it's had its little correction, and now this market here is going to probably make another run for new highs just because of the dichotomy of where Turkey is and what's going on with the coronavirus. And let's look at the British pound real quick also and see, since the euro was pulling back, the pound is not. Okay, so that's showing you that the euro, as you can see, may be running out of gas, and that might be the precursor to what's going on, but it also may be just profit taking. So all these currencies are crushing the dollar today. We don't have any signals. We're going into the weekend, so if you don't already have a trade on, you're not working it, I would say take the rest of the day off and see how the markets close, and we'll come back on Sunday and see how they start to shape up and set the new week forward. So as we have closing down this week, just remember that this dollar seems to be in play in a big way, and here we are on the second Friday in a row where volatility is just kicking up its heels. So that being said, I want to thank you very much for your time. Please subscribe to our YouTube channel, and always check us out at www.forex-trading-unlocked.com. Hello everyone, this is Teddy Keckstead from Forex Trading Unlocked, and we are here on March the 4th, 2020 with a daily Forex market analysis and live trading webinar for you to see what's going on in the Forex markets, the major currency crosses versus the dollar. And before we get into that, we just want to throw up our disclaimer real quick. Just to remind you that this webinar is for illustrative purposes only, just for education, that's it. With that being said, let's go to our live action screen here where we have the Forex-Trading-Unlocked.com workstation page already pulled up on our website. And we're going to skip past the numbers. We already have the charts up and running. See what we have going on here. The Euro-US dollar today obviously is playing with support. It's kind of just stuck in the middle of its range right now, which is making it a kind of a bit of a pain. So, but we'll see how this pans out. There we go. Why are we getting feedback here? Sorry about that. So, anyhow, we will, there we go. I think we ended it. Why are we getting feedback? Sorry about this, folks. We're getting a little bit of a loop here. We don't want that. So, I don't know why we're getting this. This is, not what we want. Let's see what's going on here. I don't know why we're getting this. Sorry for the little delay in this video here. We're just trying to get this technical difficulty hashed out here. Okay, I think we got rid of the overlap. So, okay, there we go. We have feedback still? We do. All right, well, we're just going to continue on with the webinar here. So the Euro-US dollar is trading right in the middle of its range right now. We have a downside target zone here of 109.95 down to 109.44. One thing that you need to key off of here is the swing point here of 109.51, and we have let's see, we have a sorry, heavy support. This is ridiculous with the feedback. Sorry about this. I don't know what you guys are hearing. But I'm getting way too much feedback here. So, all right, we lost the feedback now. Sorry about that. All right, back to this webinar. So yes, we have a downside target right now of 109.51. This is a key pivot area, which is right in the lower part of our downside target zone. Now, we're not calling a top right now from yesterday, but if you're an aggressive bear, and if we are running into a short-term high here, then this would be our target zone that we're looking for. Now, the thing you have to key off of is this is our key resistance is this recent high. We breach this, all bets are off. So right now we are in a period, look, the velocity of this rally is pretty fierce. It's very strong. So just to give you an idea of why we're looking for a potential at least reprieve in this volatility in this rally, let's get this a little bit easier for you to see. Okay, so this line here, this is our low back here. And markets always go out like they come in. So here we have, or not always, but usually. And we've already done that. The volatility that had got us all the way down to this low has brought us back. And also, if you look at the recent break in February, it pretty much started off February slamming the market really hard, and then in the middle found its support base, and then obviously railing up into the beginning of March where we are at now. So on a time basis, it's pretty much leveled off. And then also the volatility. We've had more volatility and a bigger move here in the past week and a half in the euro-US dollar than we have pretty much anywhere in a very long time. Like, look at this. We're going back to last summer. The last time we had a move like that, it went from the end of June all the way to pretty much the beginning of October. So if you see that, if you take that in context, then right now it seems like we should be pretty much stalling right now. Not necessarily that this market's going to become a bear and we're looking for a correction. I mean, this is our target zone should we get a corrective move lower now. But remember, we have come off of a major low. We've made a lower move high in the short run because this is our big high back in the end of the year, 1999, or 2099 rather, into January. So the question is, are we going to take out that high and make a rally up to like 112.5 or higher? Or is this where the market runs out of gas and we start to see at least a consolidation, which would set us up for a corrective slide back down towards this target zone? This market did hold key support in the midst of the coronavirus, and there's a lot of stuff going on in the euro and a lot of fundamentals that are just weighing on it to begin with. So it's the fact that it did bottom and bounce with this degree of momentum, that the euro, even though it's not a bull, it's not quite as bearish as it had seemed to be for the first month and a half of 2020. So right now we're waiting for a signal. If we can get the market back down towards its lows today, well, then we would have a short-term sell signal in the euro-US dollar, which would help us solidify a trade to work towards targeting that target zone, and then we can figure out whether we do the straight outright Forex cash trade and get short, or if we use the futures or both, or even futures options and binary options. So we'll have to see. We are at Wednesday, so with binary options, and we may not have as many opportunities as we will with some of the other vehicles. So now let's see how the U.S. dollar is faring versus other currencies. So the euro is the biggest currency versus the dollar in the dollar index. Now we're going to the British pound, which, as you can see, has been slowly grinding lower over the past few months, and we are just hovering over support right now. The question is, are we going to continue lower, or are we going to get a reprieve and get a rally going on here? Well, right now it seems like it's very tough for this British pound to gain any bullish momentum. Every little spout of a rally seems to get kiboshed right away. And unless we see some real reason for a dollar sell-off, I think you're going to continue to see the pound go sideways, not necessarily banging new lows, but I wouldn't look for any big rally, because even just by attrition, this market's coming down, and we have this downward sloping resistance line that's maintaining this downtrend, if you will, off of this last high. So if we get above this, then we have a shot at making a challenge of this $1.30-20 pivot here. And then I think we have a good chance at this market being, well, neutral and then trying to gravitate higher. Because this has been our support base for a long time, this low right here. And you can see that we're riding on it right now. So I'm keying off of this green pivot here at 127.58 down to 127.23. This is pretty much what needs to hold this market up. Any failure from here and trading below here would mean that most likely this trend is going to maintain this channeling lower with this downward sloping resistance line. Now, how far and significant could it go? Well, I think your next drop off would be somewhere around $1.22 if the pound really is a weak currency. And let's say there's a huge corona outbreak in the UK and what have you. So there's some other fundamental values that really need to hammer this market. Otherwise, it seems like the pound is rather resilient. So I'd be very careful being a bear here. But definitely, any bull right now, if you fall below this $1.27.23, you should definitely get out, because I don't think you're going to have a very good time, just because the trend is a friend, and right now the trend has been making lower move lows and lower move highs, so you got to be cautious with that. And for aggressive bears, well, then I would be very cautious being short anything above this downward sloping resistance line, and definitely anything above $1.30.20 definitely has the bulls gaining momentum and getting. Remember, this market overall has been in a bull market and has just been sideways now for the past 4 months. And we're only 1 month out into the first stage of Brexit, which is already in full motion now. So we'll see if this resiliency should hold. So right now the dollar right here is pretty mixed. It's not doing anything on the day. So let's look at the US dollar Swiss, the other currency in the euro area. And here we go. We have a low set yesterday. Today it's fighting to stay positive. It's slightly up on the day. So we have to wait and see what happens, how this settles today. Right now, the trend has technically and fundamentally, I think, been oversold as far as whether we're going to get a corrective move higher, because this trend isn't a bear trend no matter what. So any rally is going to be viewed as a correction right now. So is it time for one? Well, it always is, and it's always not. So we'll see. Right now, we don't have a buy signal, so we need to wait for a valid buy signal, which may be shaping up. Like, if the market settles like right where it's at now or slightly higher, and then tomorrow has a positive day, then I would say that we will be able to get a lead on a short-term corrective move that has the potential to get back up to this 97, maybe even 97.5 area up here. But be very careful, because any failure from 95.13 will have this market really hammering a support. So as you can see, the trend is lower. Here, we'll put our nice little trend line here from when we were above parity. And now let's bring this back out and make this a little bit easier for you to see. So as you can see, the trend obviously is, we most likely will have, if the trend remains intact, well, we'll have trouble running into getting into higher move highs, if you will, to confirm any type of strength in this US dollar Swiss trade. If anything, I think we'll have a failure should we get a corrective move up here, somewhere, like I said, between 97.5 and 97 even, depending on how long it takes for this to happen. So the question is, with this move, this was a really volatile move. Should this be a low, what could we expect? Well, let's just say that this, for hypothetical sake, that yesterday was the turning point, short-term low for the US dollar Swiss. Well, let's see. We had 1, 2, 3, 4, 5, 6, 7 days of pretty much straight off selling right there. So we are now at March 3rd. So if we go to March 10th, that is right here. So we have, if we get the same type of volatility, should we settle higher tomorrow and this bull move actually does occur? Then with this volatility, yeah, around the 9th or the 10th, we could probably get back up to this 97 area. That's where I think you start to run into a lot of resistance. Remember, here is where it looked for as a support. Obviously, it failed, so now we're looking for this area to start to become the buffer where the bears really start to trounce on this market. So overall, as you can see, this market is just off of lows. Be cautious trading this from the long side. Definitely keep your stops tight, and I wouldn't risk very much. And then, but if you catch a nice bullish retracement here, this would be a very good area to find a nice quick bounce with the way the volatility has been. So with the dollar having been hammered the way it has been, now you've seen what happened with the euro, how that's been trending. Obviously, this one has done the same. So for a short-term correction, it's not out of the line of rational trading for us to get a short-term correction at least. Not saying that we're going to get a bullish turn in the dollar necessarily. So for aggressive bulls, right now might be a good opportunity. Range traders, I think you're going to have a really good chance at buying into lows and selling into higher, newer move highs for probably a week, I would say, obviously, because today is the 4th. So, yeah, we're looking to like the 10th or the 11th to possibly get that type of a trade to manifest. So it might be hard to trade this with binary options, but we probably will have some good opportunities with the futures options. The futures also, we're dealing with rollover because it's coming up and over the next 2 weeks. So since we're only going for a week, yeah, the futures trade would still be a good viable option as well. So we'll see. Right now, we don't have the trade. For all we know, this market's going to turn around. It's only 10:30 in the morning Chicago time. We have another 6 hours before this market turns into Thursday's trading. So we need to get a signal here, and we don't have it yet. But it looks like it's trying to make one. So let's see how it's shaping up in the Japanese yen trade here. We have the U.S. dollar, Japanese yen, which is definitely a puzzler. We made higher move highs recently, and as you can see, we've definitely hammered this market over the past couple days, even yesterday. And today now we made lower move lows, but we are slightly positive. So with this one, I think we're going to have to see how if we get a positive close today, and then if we get another positive close tomorrow, then I think we might have a good opportunity to get a corrective move higher. This market had been a bull for a very long time. Now we just came off of an extreme higher move high, which came into our target zone anyhow for the longer-term trend. That price point was reached, but now we came back with such a velocity of a sell-off that I don't know where this Japanese yen strength came in, especially over the past few sessions. So we'll have to see how this goes, and we need a signal to really verify anything. I think right now, if you're a bear, I'd keep yourself. If you're already in the trade, ride it down and keep possibly lowering your stops to lock in profits, because with this volatility, there's a good chance that we will have a correction. Now remember, like if markets hold up to they go out like they go in, you can see the velocity of this rally. We've already taken out the support, and we've done it. And as far as the momentum, the snapback, we've pretty much done that. So we're kind of gearing up for at least a corrective move back up into this above 108 handle, up to maybe even 109 half handle. Originally, we were still looking for this bull market to get up to around 113 over the longer term. We got into our short-term target of 112 to 112 half area. So we could be establishing a longer-term higher low that's going to be the base for the next really big wave higher. So use caution selling into these areas right now where we're at. We don't have confirmation that there's that much Japanese yen strength to maintain this current rally that's going on. And obviously the U.S. dollar yen is a bear because the yen is positive or stronger. So we'll see. Let's see how today ends. Let's see how tomorrow ends and see if we can get a signal. So right now, use caution in this market. Now, what we do have in that trading zone that is helping the yen trade out, and this is another reason why I say use caution with the yen. The Australian dollar, U.S. dollar is finally getting a nice little corrective move here off of its low from last week. Now look at where we are though. This right here is our critical resistance zone. This area here we spiked through yesterday, and right now we're trading right in the middle of it. For an overall correction off of the longer term high back here at the end of the year, all the way down into last week, if we get just a normal corrective move higher before this overall trend continues lower, then we have this upside target zone of 67.36 up to 68.04. And then we also have this key pivot here at 97.51, which is our last lower move swing high. So if we cross this upside target zone, and then also that pivot, that takes us off the bearish campaign and puts us in a very neutral posture, which means that maybe Asia is starting to stabilize. And that if that does happen, that also is very bullish, at least in the short run for Australia, because they've been getting hammered so much over the past few months, both in every market. So right now we are at the first, if you look at it from this swing point that we were talking about, this critical level at 67.51, The correction from this last lower move high to this lower move low, we've hit our critical resist, our target zone already. And we pierced it yesterday, and now we're trading in the middle of it. And that's why I say is that if this market's a bear, this is pretty much where you're going to run out of gas before we start to bobble sideways and go lower again. But if we can hold the trade above 66.32, then I think we have a really good chance at challenging this 67.36 to 67.51 key pivot area. And if we do get above that one, well, then that really kind of takes us off the bearish campaign, where not that we wouldn't trade lower after that, but I think it would start to be a consolidation trade. And then give your swing traders some opportunities. So for aggressive bulls, if you're already in this trade, use caution. I would say definitely if we get a solid close above 66.32 here, like if we take out these high from yesterday, make a higher move high later on today, or do it tomorrow and settle up in that area, then I think you're going to have a nice little chance at grinding higher up into this upside target zone. And something that would also mean that the US dollar is being weak versus other currencies. So I would have to key off the dollar index on that one and see if dollar weakness is coming play. If dollar weakness is coming into play, then I think you for sure would have a little bit of a lift to help the Australian dollar bulls for a little bit. So use caution. If you're a bear and you have gotten stopped out on this, well, now you can look for a rally to sell. The overall still is lower. Like I said, you can either, if you're aggressive, be in here, but if we get a close above 66.32 and even still trading above here, puts us into this gap where we have an area where we have had support earlier. We need to find out, is this going to become resistance? Because if we can breach this pivot up here and get up in this upside target zone, that starts to put us back on the neutral to positive posture. So that's something we have to watch over the next few weeks. The New Zealand dollar, US dollar, also in the trading zone with the yen, and the Australian dollar is also showing strength. But this one here is not quite on. That's why we don't even have any real levels here. The only thing we can really put in here is this last lower move high as a swing point for any correction. But the momentum here for being bullish doesn't seem very strong here. You can see this trend here is very, very steep. And I just don't see this market having the strength right now to really get above like even the 63.5 area. But then you don't know. If the Australian dollar really does start to get a rally going, then I think that will help the New Zealand dollar tag team along with it, as these lesser currency crosses get a little bit of a bullish reprieve versus the dollar strength that they've been getting hammered on. I mean, look at this. This market has been in a downtrend until a few sessions ago for the whole year in this market. So be cautious here. Don't try and pick them bottom right now. But having a corrective move higher is also a very good thing and healthy thing for the market. But it may have already done it yesterday with that high. This may be it. We may actually start to go for a run back to support, and especially a surge in dollar strength. Like, should we get a big sell-off in the euro US dollar and the pound US dollar and the Swiss, the US dollar Swiss gets a big rally, then I think you're going to see this market hammering support again. So use cautious if you're a bull, but at least you know you have a ratio because you don't have to risk very much. You just risk the current lows back here if you're a bull, and then take your shot, and if we definitely start to challenge this upper resistance and you can get a break-even stop and raise it and work it, then I think you might still have a little bit of a trade, only if you're an aggressive bull. And right now, we don't really have a buy signal. We just know that a correction is kind of like something that we should have and before we continue lower or to set up a change in trend. So we have to monitor this trade for a while. We don't really have anything to go on right now. Now let's go to the Turkish lira, which has been something that we've been watching for the past couple of weeks, as this bull has just steamrolled through resistance as of late. Now we had a bearish engulfing line sell signal a couple sessions on Monday. You can see yesterday we had a big volatile day there, and look what it did. It came right into the middle of our downside target zone. So we're going to use the low of yesterday as our key pivot for any bearish momentum to continue, and also a failure from 59.99 or 59.83 down in here at the bottom edge of our target zone also has to fail. So if we take out yesterday's low, we have a good chance of testing this other key pivot area. I don't think the market has a chance at really sustaining a trade below there. I think that would probably be the extreme of this slide, but this market's very volatile, so it's really hard to say that this bull even if it does go up there, it's hard to find out where to buy it because this market's the spread in it is very extreme to begin with, getting out, in and out. So you need to get in it at a good extreme price, or else you're not going to be able to. Any profit's going to be very slight, and any loss is going to be exacerbated. So this market is for people who are very experienced currency traders and also have deep pockets. So for those of you that had jumped on this bearish engulfing line sell signal, we have hit the initial target zone. And as far as whether or not we're going to continue lower, or if that was the bounce, we can't even begin to go there. Overall, we're bullish this market. We think that this, I mean, you can see that this market needed a correction. It did it very, very fast. We'll just see. Maybe it just consolidates for a little bit. If we start to see dollar neutrality over the next week or so develop and volatility drop, then I could see you just start to get a range trade setting up where it's pretty much going sideways here, but pretty much somewhere in this downside target zone to pretty much where it's trading at right now. And then it'll probably build a base before it rallies again. So we have to see what happens. Our sell signal here has already been completed. So now let's go to the U.S. dollar Mexican peso, which has been another crazy trade, which ironically, the peso has fallen versus the dollar over the past week and a half, and that's really spring breakers that are going out of town and going to Mexico this week, next week, and the next couple weeks. Here's another one, too, is the correction off of this current higher move high that we blasted to last week. We retreated down yesterday into our downside target zone, and then today, obviously, we've lifted we came back down on it, and we barely pierced into it and exploded like a balloon underwater. So what does that give us? That means we've had a higher move high after a lower move low, which neutralized our trend, but now we've had after that higher move high, we've gone and made a higher move low, and now we're right above the midpoint of those two swing points. So coming off of our target zone like that, and if we have definitely established a higher move low, well, then I guess we're going to see a run at resistance again. So since we have spring breakers out there, we have a demand for pesos, but obviously the demand for dollars seems to be right now a little bit stronger, especially because as we're talking, the market is lifting the bid and going higher. So for all you people out there that are along the U.S. dollar Mexican peso, key off of this downside target zone as your risk. I think if you fail from here, you have a good chance at, remember, this trend had been lower for a very, very long time. So right now we could just be in a very long consolidating sideways pattern that is going to be what will be this trade for maybe even for the rest of the year. Who knows? Let's see how dollar strength really comes into play here. Now, speaking of dollar strength, we have a market that is showing dollar weakness, or at least had been. 2 sessions ago, we had a bearish engulfing line sell signal occur. Right now, as you can see, this market is hovering back right below the highs. So this sell signal right here is in jeopardy of failing. So for anyone that's in this trade, remember your risk was right here at this high. So we're going to still keep this. If you're an aggressive bear right now and you're looking for a correction, or if you think the sell signal will still hold, you're getting a really good opportunity because all you have to do is risk this high right here from a couple sessions ago, around $1.3467. Just to let you know, we are, that's the wrong account. We're flat in that one. On the Nadex, we'd have a couple options that we put on earlier. We are short the 133.75 and 134 quarter strike prices. So let's put this into perspective for you. So we'll draw a horizontal line of the 134 quarter. Let's change this to 25, and we'll color to red so you know what we're talking about. And then we also have the, all right, so that's the 134 quarter. So we have the 134 quarter strike price and the 133.75 strike price. All right, so 133.75. Okay, so we're going to put these in, get these balanced out for you, just so you got this straight. Okay, so you can see 133.75 and 134 quarter. These are our 2 red lines that are horizontal across here. So these are our 2 binary strikes, which we are short. So that means that the market being above that is not good for us. So we are short the strike. So any trade that in the U.S. dollar Canada at these strike prices, if the market is higher than that, and especially at expiration, if the market is higher, then those trades, those longs would be good. And we are short, not long, because we took the sell signal. So that means that we have the time yet to ride this out through Friday or into Friday afternoon. But if we get a breach of this high at 134.67, that negates our sell signal. So even then, if the market does fail and becomes a bear, our sell signal would fail. But right now, it is still in place. So any aggressive bear that still wants to jump on it and thinks your reward to risk ratio is huge now because the market's at 134.29. You're risking 40 pips. On a trade that targets 132.09 down to 131.49. So that's a pretty big deal. So for the futures and for also the outright cash Forex market, this is still a very good selling opportunity. Or if you're an aggressive range as well, to sell into these highs, looking for another slap back on support. So we do, like I said, we have the sell signal still in place. We have to ride it out and see what happens. Today's trade, even though the U.S. dollar Canada seems to be a bull right now, it doesn't mean that it's going to maintain its bullish posture. So the dollar seems to just be rearing up strength just in general right now as we've looked at these different markets, as you can see. So except for obviously in the Turkish lira. So, yeah, so we have to watch this trade. So right now, it is very questionable whether it will still hold, but if anything, if it does work and the sell signal does manifest itself when we get the slide down into this downside target zone, then that means that right now there's a hell of a great chance to short this market. And just to remind you, we also are short in the cash at 133.35, so we'll put a line in there at 133.35. Okay, let's get this fixed right here. And we'll change the color for this one we'll make this one a dark green. Okay. So these three levels right here, the two red ones are binary strike price. Are short, and then obviously we're short down here. So as you can see, we sold into this higher move low, which may have been a very big mistake. So that's the one thing, you never know what happens, but right now the sell signal still is in place. Only if we breach this 134.67, making higher move highs, would that confirm a higher move low, and also our trade is definitely we would be stopped out. But right now we're still riding it because it's in place, and this is just what it is. So we'll see how it goes with this trade as the rest of the week follows, and also especially with today. So right now as we are talking, it's trying to push these highs, but then also it's just before 11 o'clock Chicago time. So we'll see how this works its way out. So now let's take a look at the Euro US dollar once again, just to see where things have gone. Now look at this. U.S. dollar strength continues to rear its head. Here we have maybe we'll have a sell signal come the end of the day. If dollar strength continues to occur here, that definitely hurts our Canada trade, but it does set us up to have a new short in the Euro US dollar, looking for a slide back down to our target zone. So remember, we have the Turkish lira trade, which is over. We have the Mexican peso trade, which is over. We have a couple other ones that they found their bounce points, and now we're looking for new signals. We have the sell signal in the U.S. dollar Canada, which is under pressure and looks like it wants to fall apart. Not looking so good for that one. And we have a potential sell signal setting up in the Euro US dollar. So as the day progresses, we shall see what happens with the markets, and then we will see what goes on with the closes in particular, so we can find out whether we do have a new trading opportunity. So we'll have to have that in our webinar later on for tomorrow's trading. So with that being said, thank you very much for watching this webinar. And as far as these buy and sell signals, if you want to learn how to trade them, read the book High Probable Japanese Candlestick Pattern. It's available on Amazon and Kindle and paperback, and with that you can learn the best buy and sell patterns used for over 400 years to give yourself a competitive edge against the markets. So we'll see how these pan out over. In fact, we have one, like we said, that's going on in the Canada. We'll see if it works or doesn't work, and then we'll see if we have these other ones manifest today. So we have some potential sell signals and buy signals going on. All right, with that, thank you very much.
Welcome back, folks. Dow Industrials. Where is she? Yeah, there we go. Dow Industrials right now are trading, sorry about this, folks, up 13, NASDAQ up 16, S&P's up 7.5. Let's go over to our man, Mr. Teddy Cakestad, as we do each and every Wednesday at 40 past the hour. You can reach Teddy every trading day, folks, at Forex-Trading-Unlocked.com. That's Forex-Trading-Unlocked.com. Teddy Cakestad, what's going on?
Well, we got some nice moves shaping up in the currencies to start the first full trading week of the year off, I think.
That's for sure, huh? How about last night? Holy cow. I mean...
Right. Well, the Middle Eastern thing is fueling it, right?
Yes. No doubt. No doubt. So where do we want to start, Teddy?
I think you want to start with the euro and the pound.
Okay.
We have the Brexit deadline that's coming up on January 31st. And the pound, I think, is going to be a scary trade. I think it's going to be a range trader's delight and a swing trader's nightmare as we head into January 31st. I think it's going to be a very tight winding trade, and it doesn't matter what's going on in the Middle East. But the euro-US dollar hit some key support. We had a big sell signal in the euro-US dollar last week, and we just touched the top of our target range. There might be a little bit more to go. I think that because of the Brexit issue, the euro is going to start to get really tight, and also with high oil prices, it's going to be really hard to break the euro as well.
Yeah, interesting, man. And then, I mean, the yen last night went ballistic, right?
Yeah, absolutely.
What happened, folks, is that all the, not all the indices, but gold, oil, yen, totally makes the yen, bottom line got down to 107, 107.65, and then just shook it off too.
Mm-hmm.
Yeah, so.
Yeah, now it's $2 higher.
Yes.
Or a full dollar higher, rather.
Yeah, it's pretty intense, man. There's no doubt about it.
Absolutely.
Yeah.
Absolutely. We've been talking about how, with the dollar index, when it was under pressure,
yes,
the U.S. dollar yen would still rally. And now you have the dollar index finding some support, so it kind of gives lift again to this market. It's hard to break it down.
It is. I mean, so when you look at this index, folks, so, the number I'm keeping my eye on is 97,141. You're over 97,147. So you're jumping back in the higher range again,
Mm-hmm.
And we'll see whether it can hold. I mean, I expect the broad market today, as well as these currencies, to have more volatility than normal. I mean, because most times what I've seen is that when you get a night like last night, people think it's calm and cool, and it is at this particular point, but my take is that we're not going to stay calm and cool, because it's this is a nervous market, man.
Right. Well, what's interesting is that the U.S. dollar is getting a big lift against the Japanese yen right now, and also against the Canadian dollar. And the Swiss is actually, it's trying to, I think it's pretty much unchanged on the day right now.
Okay.
Yeah, it's pretty much unchanged. So, but those are the ones where you're seeing the most movement. And that's why I think that it's amazing how, with this turmoil in the Middle East, how the market can really shrug this off and pretty much absorb it, because it seems like the pound and the EU, and the euro rather, are more concerned about their Brexit deadline than they are about the Middle East.
Yeah, that's interesting, man. And I guess, you explained it to us last week. I mean, this has been quite a move in the Swiss franc, right? I mean,
yes.
It's, we're at 97.02. And it's like, that's the lower end of this range, right? I mean,
absolutely.
Yeah.
And that kind of goes with, remember how we're looking for a little upside correction in the dollar? This was before this whole thing launched in the Middle East.
Right.
We were looking for a dollar rally. So they kind of fundamentally and technically line up. And then we had all those signals that were triggered last week, remember, for corrective moves in the euro and all these other things. So yeah, to see the dollar index get up to that 97.5 area, even 98 even, that's very likely, I think, over the next week or two.
Man, there's a lot of moving parts in this marketplace, man. I mean, there's no doubt.
And then get ready for the next drop.
Yeah, listen.
I think long term for sure.
What I've found more than anything is that I'm looking for at least a test of even last night. When you get spikes like that, the bottom line, they love to go visit their friends, man.
Right.
It's just a matter of when they do it. And I remember even, folks thought when that flash crash came in, I don't know, about 10 years ago, they thought it'd never get revisited. It got revisited. It's when those things happen, they just like to get revisited. It is what it is. I don't know if it's a technical, fundamental issue, but they like hanging out, no doubt.
Mm-hmm.
You know, it's
There's some interesting moves in the some of the more exotics, like the pound euro trade and the Swiss euro. The Swiss is actually a very strong currency right now. So I think even if the U.S. dollar Swiss gets this nice little bounce, which we're kind of talking about right now, I think overall the U.S. dollar is going to take a dive against the Swiss over the next like 5 to 6 months.
Yeah. No, listen, you know, we'll see where this shakes out. I mean, my take is that we broke that longer term trend in the dollar, and that's a 18-month trend. So that's quite a trend. And what does happen, folks, every time that you try to test this higher area, which the dollar is doing out here today, if it makes it, it makes it. Doesn't make it, that's another indication. You know, you test, you test, you test. We've already tested it twice. It's failed twice. We'll see, you know, what ends up happening here. And, you know, it just lines up the supply versus the demand, right? I mean, yeah. So
that's where the really basic fundamentals come in line there.
Yes. No doubt. And I guess, you know, in our case, I mean, you know, if we went back, you know, 10 years, Teddy, I mean, everyone was worried about the deficit. Now, and I don't think I can find a conservative fiscal in our government. Right? I mean, you know, the bottom line, folks, is that, you know, on the internet, if you can rewind some of these things, and you can, folks, okay? I mean, 10 years ago, you know, everyone's worried about, we have too much debt. Well, the printing presses have never stopped, and they've exploded higher. You know? And sometimes when even, you know, I hear even other analysts say that, well, this can't go on forever. Sometimes I think, well, why can't it?
Well, you know what? You actually said something that's really interesting there, Tommy. You're the big equity guy, and think about this. Remember, like when there was the crash of '29, there was only the Dow. Okay. In 1987, there was the S&P 500. Now you have these multiple indexes, multiple industries. We have the aerospace industry alone that could dwarf everything in history as far as the stock market's concerned. So every other business could collapse. We could have a total like depression going on, and the stock market might elevate to levels we've never ever even thought of.
That's interesting. Yeah. No, listen. That
you know.
No, for sure. There's no doubt, and that's where. You know, if inflation is creeping in, that's where you absolutely can have higher numbers, even though folks, you know, bottom line aren't making what they made. If I learned anything when that whole Zimbabwe deal happened, I remember us watching that Zimbabwe stock market, folks. Before their currency collapsed, the stock market went, and then, of course, when it collapsed, it went even higher. But that was a lesson, I think, for anyone, right? You know, a number is basically arbitrary. You know, it's what that number can buy you, right? More than anything.
Right.
You know?
Otherwise, you have, you know, the depression like you had in Germany in between World War I and World War II.
Yeah, pretty intense, man. Well, listen, folks, you know, our man Teddy, if you've missed Teddy did a couple of Dave's shows last week. They were fabulous shows, Teddy. We really appreciate it, man.
Thanks a lot. Those were fun.
Okay, man. You have a great one, safe one. Of course, we look forward to Wednesday.
Take care.
Thank you, man. Stay right there, folks. Tommy and I are coming right back. We have the Dow right now. Let's see. Dow's up 6. Nasdaq's flat. S&P's up 4.5. We're coming right back.
Hello everyone, this is Teddy Kekseth from Forex Trading Unlocked with a little webinar today where we're going to go over a bearish engulfing line sell signal that was triggered in the Euro US dollar Forex currency cross rate. Before we get into that, we're going to real quick just pull up our disclaimer to remind you that this webinar is for illustrative purposes only. And now let's get to the meat and potatoes here. So we had the Euro US dollar Forex currency cross pulled up here on this chart, and you can see that Friday's session probed newer move lows and settled negative on the day. And the day before, on Thursday, the first trading day of the year, the Euro US dollar had closed and made this pattern right here. This is called a bearish engulfing line. It's a sell signal. It's a Japanese candlestick pattern. It's also a very reliable reversal signal. So when the trend has been going up like this, you can see the long-term, intermediate, and short-term trend has been bullish and pressing higher moves into the new year. But then when we had the first trading day of the year, we had this big sell-off. So when you have a body like this, where it opens where the market had closed, or is it just above that, and then it takes a body of trading from that prior bar, that's how you generate this signal. It's called a bearish engulfing line. So this sell signal, where does that have us going? Well, right now we know that this is a counter trend trade. The overall trend is bullish. We are not necessarily bearish overall this market, but for a short term, we are bearish, looking for a correction that is obviously unfolding, and had continued through on Friday to probe this low. But as still, remember that from this low here, we had higher move high, higher move low, higher move high, higher move low. Last higher move high was exhibited on the last trading day of the year, right here. And as you can see, the market is now in a corrective phase. But this is right now, we're looking for a higher move low, because right now it's a bull trend. So we don't want to try and pick a top or a bottom. That's something you never want to do. And so right now we're just looking for a correction. So where does this correction target? Well, right now the steepness of the overall trend on this lower rising support line here, this is a pretty good slope for a trend to continue forward. It's not overly there's not a lot of momentum to the upside, let alone the corrections aren't really severe. It's just a nice little upward trend with higher move highs and higher move lows. So with that being said, if we hold that trend, then this target zone right here, this downside target zone, where the top is about $1.1108 down to $1.1076, this area right here, that puts us still above this last higher move low. So if the market comes down in here and bottoms and finds some good support, this would be a nice little spot for the trend to then resume. Does that mean we're going to hit this target area? Not necessarily, but the dollar index currently is in a corrective rally mode. So with the dollar index being in that mode, that kind of helps to add momentum to the bears for the euro as the U.S. dollar gains strength. Now, if the U.S. dollar index is only in a corrective mode, that would also help for this euro-U.S. dollar currency cross to kind of bottom around here. And even if it falls through this target range, it's likely that it's going to bounce off of this lower support line. So is it possible to take out this initial support line that's a little bit steeper? Absolutely very possible. However, the trend right now is very strong with bullish momentum, so I'd be very cautious being a bear. So if you are a bear, what do you look for? Well, this last higher high with a top at around $1.1240, this is where you would look to be for your risk if you're a bear. You don't want to be short above this line. So what does this set us up for as far as for traders? So what do you do for Forex, futures, and options traders? Here's how you can work this trade as we start the new week off. Right now it's Sunday. It's in the beginning of the early part of the afternoon, Chicago time, so we still have a few hours before the Forex markets open up, as well as the futures markets. So we have all kinds of opportunities everywhere from the Forex markets, the futures markets, the futures options markets, as well as the binary options markets. So we'll start with the FX. If you're looking to short anywhere from this close from Thursday, which is at $1.1172, kind of right near this caramel colored line right here, just below that. If you can get a chance to sell anywhere around that area or higher, that's a good opportunity with a good risk reward ratio for targeting this lower downside support zone. Reason being that the closer we are to this high up here, the bigger the risk reward ratio is, and you know your risk is then limited. So for outright Forex traders, you would look to be short if you're not already in here. I would be leery of selling closer to this downside target zone because there's not much left, and if it snaps back, especially back towards to make higher move highs, then your risk reward ratio is out the window. So you want to, if you can get back in the trade up here in the Forex markets, that would be good. Same with the futures. Now the futures price is going to be a little bit different than it is for the cash market, but it's still in the same mode. So if you see the futures and the Forex markets get a rally Sunday night into Monday morning, and you have a chance to sell around this $1.1180 area or somewhere just below that, that would be a good opportunity, giving you that good risk reward ratio for this downside target. Otherwise, if the market opens up around where it settled on Friday or even low, then you really have to look at options plays. That's where I would look at either futures options where you could sell credit spreads above the market, or you could look to, depending on the pricing, look at some different various strike prices for puts. Options trading, futures options trading, we could spend a whole half hour just on different trades for that. So if you're an options trader, you know what to do. I'm just giving you examples. You know how to price them out. So yeah, credit spreads above the market, especially any strikes that put you above this $1.1240 or right around here. And the same thing is for binary options. So if you have, for instance, any strike prices that are around the $1.12 area up to $1.1240, you would be looking for the market, especially on a weekly option, because we're starting on Sunday, giving yourself a few days of trading, buying time actually. You would probably look for strikes around, like I said, above the $1.1240. So I think there's binary strikes would be around $1.1225 to $1.1275. So somewhere in that range, you'd be looking to sell those. If you are closer to the market here, like around $11.75 to $1.12 even, or down to $11.50, you probably will have a little bit more of profit potential in those strikes. But remember that we could spike down in this target zone and then come back up really quickly. This market is a bull, so this is a counter trend trade. If we were looking for a buy right now that was going with the trend, then I would say there's a little bit more opportunity and a little more risk that you could take on. But since it's a counter trend trade, I would say, especially with the binary options, look to sell the options that are closer to the original sell signal and closer to your risk level. Anything that's down near this target zone, I think you'll start to run into some issues where you may have a profitable trade, and then the smartest thing would be to take a profit as soon as you can in that kind of situation. But that's not the way to trade. But if you're looking for just a quick intraday type of trade or something like that, that's probably something that will be you'll have the opportunity to jump on over the course of the next few sessions. Now, one thing you want to be considering is that this downside target zone right here, we're coming into the Brexit vote for the UK, and it also obviously affects the EU. So as we probe support down this target area, and especially over as we get through the course of this first full trading week of the year, you may start to see volatility drop in the euro and the pound, meaning that any moves are less likely to be exacerbated, and the range for the euro US dollar as well as the pound US dollar may start to become very contained. So for directional and traders, I think right now you have your last little bit of opportunity for the month, and then hopefully we hit this downside target zone, and once the market comes down into this area especially, I think you're going to find a lot of support, and you might start to see a range trade between this $1.1240 or this upper part where this high was, and also where this last higher move low was right here. So you can see these two yellow pivot lines at $1.1064 and $1.1240. It's not that wide of a range, but the euro US dollar hasn't been trading in a very wide range for basically the last year. We did have a nice rally move during the holidays. That was one of the biggest trading days, trading moves that happened in the euro US dollar over the last 6 to 12 months. So the average true range is pretty quiet. That being said, that gives, as far as if the range stays that tight and the volatility stays that tight, as long as this bearish correction is correct and true, then you're probably going to see it take about a good 3 to 4 sessions going into the end of this week to touch down in this target zone. And then that will be a good spot to find support and then get a little bit of a rally, which basically would contain trading somewhere in this $1.1064 up to basically where this caramel line is, around $1.1180, which is only a little bit over a full dollar worth of range in the US dollar. So basically, what is it? That's 120 pips. Not the biggest range to work with, but you have to take what the market gives you. And right now, the volatility in the euro US dollar as a whole has been very, very tight. So recapping this bearish engulfing line sell signal, When you have the market rallying up like this has for multiple weeks, let alone actually over a month, you have a signal like this that's generated. It usually gives you a good opportunity to have a counter trend trade for at least 3 to 10 sessions, depending on the volatility in the market. Right now, I would say you probably have a good 3 to 7, 8. Like I said, we're coming into this Brexit move down here. This is what this black line is. This is the date for it. It's a big deal. So we know Brexit has been something they've been talking about forever, but this is finally going to happen. Now they have to hash out all the trade issues and whatever. Will that take? Well, if it goes like it did between the EU and Canada, it could take 7 years. But at least we won't be talking about Brexit. We'll be talking about post-Brexit. But the word Brexit is going to be probably part of our vernacular and terminology in the trading industry for still yet a few years to come, unless they could somehow just copy the Canadian deal for the UK, which is kind of what Boris Johnson is shooting for. But I would say that the EU, since they're very unresponsive and don't want the UK to have their sovereignty, that they're going to continue to make the trade barriers very difficult unless it starts to impact them, where they start to see that they need the trade with the UK. But those are other fundamental factors that we cannot really predict, and we'll see what that happens as it unfolds. It's definitely going to make the euro US dollar and the pound US dollar trade interesting over the next 6 to 12 months. But right now we're looking at the next few trading sessions into the end of this month. So this bearish engulfing line sell signal, we're targeting this downside target area, and it's in between these two slopes here, upward sloping support lines, and that's a really nice area to look for a nice bottom. We'll get this hopefully solidify a bottom here, and then we'll start to see a little bit of a rally, looking for another move to challenge this last previous higher swing high. And if you want to learn more about how to execute this bearish engulfing line sell signal, you can see that we're on the Forex-Trading-Unlocked.com website. We're on the workstation page, but any of the pages on our website, if you toggle all the way down, you can find access to high probable Japanese candlestick patterns, and that will get you on your way to learning how to implement these patterns. So right now we're giving you this downside target zone. If you want to learn how to actually execute the actual target and risk parameters for the Forex, the futures, and the options markets, read the book, or you can wait for the next signal, and we'll have another video on it in the after fact for you to follow and see how that unfolds. And with that being said, I want to thank you very much. Check us out all the time at www.forex-trading-unlocked.com and subscribe to our YouTube channel so you can get these videos and notified when they out right away.
The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
For the Power Trading Hour here on TFNN, and we are going to cover the Forex currency markets, and we have a lot to talk about in the wake of. We have the conflict that has definitely started up in the Middle East with Iran and the United States, which has got the oil moving, and right now the Dow is definitely down a little bit. So let's see, they're trying to have a problem with my charts. You got a voice here. Let me see. I'm going to try this once again, guys. I'm doing the thing here. How about now? I just clicked on the video cam thing. I got my notepad up. How about now? You guys getting some charts yet? You see? We need to show these guys the charts so that we can talk about the markets. We're going to talk about the euro US dollar first. We got a nice little sell signal here. Let's see. I'm talking to TFNN guys. Looking for my charts. I don't know. I just put the thing on here. I thought you guys saw this already like 10 minutes ago. So we are looking for them. Okay. There you go. How about now? We don't see them in the den. Okay. You don't see him in the den. Okay, well, I got the video icon on. How about now? Do you see him yet? Okay, all right, now you got it. Okay, good. All right, sorry about that, guys. All right. Out with the euro US dollar here, and we have a bearish engulfing line sell signal that was triggered yesterday, and today there was a big sell-off in the euro US dollar, but now it has come back quite significantly, as we're coming close to the end of the trading day and also the trading week. So what's going on? Why is the euro US dollar coming back so strong? Probably because of the oil market being up over 2% today. I'm not quite sure where it's going to settle or where it's all at around globally where it's gone up. I know it's up somewhere a little over 2% on the day. So that being one of the variables going on that kind of does give a little strength to the euro itself and the euro involved in various cross rates, including versus the dollar. So there is a rally in the dollar index, which is going against the trading the way we started yesterday off, the first trading day of the year. The dollar index had a nice little rally against most of the currencies and sparked these sell signals and buy signals. So first we have the euro US dollar sell signal here with this bearish engulfing line, targeting this downside down to a 111.09, 110.79 support band. So this is most likely over the course of the next week or so. If this sell signal stays valid, this would be the area where you'll probably see the extent of a slide right now. Remember, the market right now is in an overall bull market. Even short term, it had a very big velocity of a bullish momentum over the holiday season, and now all of a sudden we start the year off. Of course, we had some news that came out unexpectedly last night after the markets closed, so they kind of go counterintuitive. Well, actually, right now they are supporting the dollar index rally, so it should help over the next week or so, as these tensions probably are not going to subside over the next 24 hours. They probably be going on for at least a couple weeks. Hopefully they get mellowed out, but we don't know right now, especially because this seems to be escalating going into the weekend. So the biggest pivots you need to look for if you're a bear is this last recent high from 2 sessions ago here at $1.1239, this blue dotted line. Any trading above here definitely confirms the bull trend is in full force and probably would have the market targeting up around the 113 to 113.5 area. It's a grind higher. There's no expectations that the euro US dollar is going to really accelerate a big move against the dollar, especially if the dollar index is rallying over the next week or so in lieu of what's going on fundamentally in the markets, especially geopolitically. So I think that high is probably safe and intact. So there's multiple ways you can trade it. The nice thing is that since the euro US dollar did pull back close to where it settled yesterday, if you're looking to get short, then you have a really good chance at maximizing this downside move should it still unwind over the next week or so. And also it gives you a bigger risk reward ratio also, because you know your risk is at $1.1239. So if you can get in around somewhere around this $1.1164 or even a little bit higher, as far as whether you're trading the outright Forex derivatives or futures or options against it, that would be the way to kind of look at it if you're an aggressive bear, because remember that the trend is up. This is a counter trend trade, so it's looking to be a retracement move, not an overall change in trend. This is just kind of a profit-taking opportunity. And especially if we get a dollar index rally, that would also foster this trade and help to give it more momentum. So the key levels to remember is if you're looking for a bullish breakout or for bearish risk is this $1.1239 area, and then we also have your downside target zone. Looking for support, especially I doubt you're going to see it get below this $10.65 area. If it does, that would be taking out this last higher move low, and that would fundamentally put the market into a neutral state and then targeting this $10.38. Only below this area here will we be getting very bearish. And the odds of it happening are probably diminished because of the fact that, see this dark black line here? This is our Brexit 2020 line. We do have a deadline of January 31st. Is going to happen. Whether the trade deal gets done on time by December of 2020, that remains to be seen. I probably will put the odds against that. So that's a whole topic of another conversation. We could spend an hour just alone on that, but we don't need to because that's not that important. But what it does mean is that we probably will see volatility drop in the euro and the pound over the next couple of weeks as we head towards Brexit and then that final crossover point. But this right now with the dollar index, we're looking really good at this downside target zone. So since we started talking about the pound, Let's go to the British pound US dollar currency cross real quick before we go to our break. All right, this one is a little bit different. This is not coming off of highs. It isn't a bull market, but right now it's been in a retracement. We had a higher move low, and then we made this lower move high. And did we have a sell signal yesterday? No, we have a fundamental reversal signal from yesterday, but nothing really major, nothing for us to give any real credence to a big move one way or the other. So big sideways. Is that the call for the British pound US dollar? I don't know. I think the most likely case is yes, because the volatility in the pound, if you look at back here, this little consolidation period over a month and a half, almost 2 months, it kept a very, very tight range. And since we are heading towards a definite Brexit now, Boris Johnson got his wins. The elections are definitely proving that they're going to go forward with this date here. This is the line in the sand. So I think that this target range set up by this high from 2 sessions ago and the higher move low that was set a week and a half ago, that this is probably the most likely range that you're going to be contained in. Any breakout of the high from 2 sessions ago or this low then puts us leaning on this critical support down here at $1.2758. Otherwise, I think unless you get a breach of $1.3294, then you're probably going to see a nice bullish surge pressuring the $1.3513. But I would think that you're not going to see this until probably after the Brexit date is taken care of. So we'll see how that goes over the next few weeks. Actually, it's a pretty interesting start to the new year. Now, remember, the dollar index is under pressure, is railing right now, so that should keep the pound under pressure. So it would be not outside the realm of possibility to see support keep on getting tested and pressured down towards this $29.01 area. Now we're going to go on to break now. See you in a couple minutes.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hello, everyone. I'm Teddy Keckstedt back here on the Power Trading Hour, and we're talking about the Forex markets. So far, we've covered one sell signal in the Euro-US dollar. We left off with the British pound US dollar, and we can see that it's most likely settling into a nice sideways trade. So where are we going to go next for the European markets? Let's go to the Swiss franc US dollar. Okay, now this market's a little bit different than the other two. It has been violent decline over the past month. But we did have a bullish engulfing line buy signal that was triggered yesterday in this market as well. So we've had a lot of Japanese candlestick patterns that have been popping up over the past 2 days, and this is a nice kind of good indication for when markets really turn, when you have synchronicity going on. So this is making these signals all kind of gel together. So here we have a bullish upside target zone of around 98.34 up to 98.78. So as you can see right now where the market's at, it's at 97.18. Your risk would be 96.46. So these are your key numbers to take into account right now. Your initial targets would be obviously, once again, this 98.34 up with a topping area of 98.78. So somewhere in this zone is where we're looking for a decent correction. Because this market had such a violent slide, markets typically go in or go out like they go in. So we're expecting over the next week and a half to 2 weeks at least a good correction move up to somewhere at least coming towards this 98.34. And also we have the dollar index, which right now probably, especially because of the things that are going on in the Middle East, there's going to be a lot of buying of US dollars. Now the Swiss, because it is also a flight to currency actually, that just like the US dollar, there is going to be a lot of buying of the Swiss market also. So see the other crosses for the Swiss, you'll probably see it becoming a bull, whereas right now you're going to probably see it correcting back a little bit as the US dollar starts to gain in momentum. So we have this bullish engulfing line signal, and then this is our target range, and then once again here is your risk down here. So right now your risk reward ratio, if you look at it, you're trading just above 97 cents, and you're looking for a 98 up to almost 99 cents. So that's definitely a good area for if you're looking for a nice bullish run and a nice correction. Overall, a bear for this market. Only above here at parity will we even start to think about becoming a bull, because then that would be a lot of buying and a lot of support for this market to get up to that level. So for the European currencies, we definitely see them under pressure as the year starts out, and we have nice signals that are going with it. So let's look at the US dollar and the Japanese yen. This is a market that had not been really running with the herd, however, has definitely seen some very interesting things over the past few sessions. So the market had topped at the beginning of December and had a nice correction down to where you see this little 1 number right here. Then it came up and tried to make new move highs, but it failed to set the beginning of the wave 2 correction. So that was butting up against resistance, and no matter what, the US dollar couldn't breach this area. Now, all of a sudden, the dollar index started to fall apart, and actually the yen, at this US dollar yen cross, actually started the wave first. It fell apart, and it took out 2 definitely long-term support lines that go back to way back months ago. And now over the past few sessions, you can see that we've followed through down to this 108.032 area, which is a very key pivotal point for the US dollar yen. So any trading above here keeps the market in this bullish market, which it's been in a very good fashion still. It's a nice little corrective area and a nice area for it to bounce. However, trading below this 108.32 area is very negative, that this third wave lower is going to extend itself down towards this target area of $1.07.129 all the way down to $1.06.492. Let's see, is there a lot of traders in this US dollar TRY? We'll look at that in a little bit. Okay, so the US dollar Japanese yen, like I said, is in a nice bearish formation. You started out with a rejection over these highs right here. So we have a lower move high and we have a lower move low, which has been confirmed over the last 2 sessions. So overall, this puts us in bear mode now with the US dollar Japanese yen. this is also counterproductive with the dollar index. This is one thing that's been going on with the U.S. dollar and the Japanese yen, is that while the other currency crosses have been running kind of in a herd, especially when there's been a major move in the dollar, the U.S. dollar yen has not been doing that. So right now, I would say, especially as we start heading towards January 15th, unlike how we just spoke about Brexit, which affects the British pound, the euro, the U.S. dollar, obviously, and even the Swiss. Now we have also the trade agreement between U.S. and China that supposedly has a deadline of January 15th. And here, I'll put this to mark right now so you can see this. So we're coming close to this deadline. So I would think that, is it likely that we would break all the way down to this lower target zone? Anything could happen. However, I think that since we're only a week and a half away from this, that you're most likely going to start to see a consolidation of trading, kind of like what you had up here when we were butting up against resistance, and kind of float sideways until we cross this January 15th, because then it'll give us some idea of what's going on between obviously the United States and China, but also the other Asian countries and the United States moving forward with international trade. So these are big things to kind of pay attention to as we move forward, for sure, with the over the course of the next month, which is amazing that in the month of January here we do have a Fed meeting that's at the end of the month. But before that, we have the trade contract that supposedly the first stage will be signed on January 15th, and then we have Brexit. So these are all very big currency-related interests that are going on, and variables that are fundamentally something that most Forex traders, if you're not paying attention to, you're really going to get caught off guard. All right, with that, we are now switching over to the Australian dollar, US dollar, to see what else is going on in that trade zone. So, unlike the yen, which didn't have a sell signal or a buy signal, we do have another bearish engulfing line. So we've had a lot of Japanese candlestick patterns that have evolved over the, came out over the past few sessions. And now today it was confirmed, and ironically, it took today down this low to this pivot here at 69. That's a nice little pivot long term. You had a top here, and over the past, you've had a lot of bottoms and tops in that area. So it bounced off that nice today, but it is still bearish, and we do have a downside target zone down here of 68.83 down to 68.52. So right now, the bearish engulfing line is still active. The risk level here for any bears that are trading this would be at 70.31, and if you're a bull, if you're looking for a breakout level, that would be right there. Now, the steepness of this trend has been pretty strong over the past 2 weeks, especially. So for a little correction and consolidation, it's probably a very good thing for this market to do before the bulls start to really bring this market back up. Remember that since the dollar index is rallying and the dollar is gaining strength right now because of fundamentals geopolitically, that gives this Australian dollar, US dollar sell signal a really good opportunity of at least coming back through this key pivot and then coming down into our downside target zone before we get any type of bounce. So if you want to learn about any of these signals or how these signals are evolving, we'll have some more YouTube videos on our YouTube channel for Forex Trading Unlocked. Just check it out, search it, and subscribe, and then you'll be emailed when the videos come out. So, and these signals are, when they come together, like I said, we have a dollar index move that started to unfold yesterday, and through yesterday's trading and into today, you have major currency crosses now that are confirming this dollar correction with these signals. So it's going to be, when you have these all lining up, it's one thing to have one market that has a signal like this for a correction every once in a while, but when you have multiple currencies all at once simultaneously coming through with these different buy and sell signals, it really screams to you that the dollar index is definitely ready for a correction move to the upside, because it was under pressure for a lot of the period of December, for most of the month. So we're kind of looking at January starting like November, and we'll be back in a couple minutes to get back to that.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, everybody. This is Teddy Keckstedt back again for the Power Trading Hour, and we left off with the Australian dollar, U.S. dollar. So we have a couple questions from the chat room. We had from Bodie. We had about the U.S. dollar TRY. That's a Turkish cross, about how is there a lot of traders active in that market, and actually it depends on certain global situations that it does get flare-ups and does trend nicely every once in a while, but it gets very spikish in volume. But it is one of the major lesser currency crosses traded globally for sure. And then also another question about you see a lot of Elliott 5 waves everywhere. That would probably be coinciding with the fact that we had a turn in the dollar that started in October, and you have had a turn in most of these currencies. Like look at the Australian dollar here, how it bottomed in October and has trended up until New Year's Eve, setting this new move high. Now, right now we're in a corrective mode. We have a bearish engulfing line sell signal that coincides with that. Plus, we have the dollar rally due to fundamental global geopolitical concerns. So these all reinforce this trade temporarily, but overall, this market is in a bull market. Also, the dollar index is in a bear market. So right now, we're looking at the dollar index. Any bullish move right now is seen as a correction, unless it gets a very, very big rally. So back on track with that. So that reinforces our signals that are going on right now. So that would be why Bodie is the guest on the chat that asked the question. That would be why you see all these Elliott wave 5s and you have these turns now in the currency crosses. So what does that mean long term? Well, long term, that means that these bullish trends probably will remain, like especially with the Australian dollar, US dollar. Remember that just like with the Japanese yen, we have this January 15th date that's coming up. So look at how close we are to this. Wouldn't it be nice if this break comes down, comes into our target zone. Over the next week and a half, boom, we have the first trade deal signed from the U.S. and China, or the first phase, the new trade agreements, which would definitely give some good news for Australia, because Australia has most of their eggs in one basket, that being China. So we had good news at the end of the year as far as they actually had growth that was unexpected in China, and Australia actually did better than they were expecting. Their biggest problem now is actually the wildfires, regrettably. That's something that's horrible that's going on that probably will have a drag on also their production, which is going to be interesting to see how China deals with that, with the potential slowdown in their demand for commodities over there. So, or they'll have to go and look at other resources for that as well, coming out of South America and a couple other different countries. So this is our target zone here at 68.83 and 68.52. So while we're in the Asian trade zone, now we're going to go to the New Zealand dollar, US dollar. Now, all these trading signals that we've been talking about, once again, you can check us out on our YouTube channel for Forex Trading Unlocked. This weekend, we're going to be covering all these different individual markets and seeing how they pan out and play, and see how the other fundamental factors coincide with what's going on right now. So New Zealand dollar, US dollar, also a bearish engulfing line. So we've had multiple bearish engulfing lines, multiple sell signals. And now this is the one market that until yesterday, I would not have said to even remotely look to sell this market. But yesterday we started off the trading year with a bearish engulfing line. It settled in that nice little spot, gave us the signal, and now, regrettably, it's something negative, like geopolitically, like the turmoil in the Middle East. It's actually helping to fuel this trade, because the U.S. dollar, as it gains strength, also means the good chance for this trade to unfold. So right now this is a very big downside target zone, and there's a lot of support here. One, we'll start off with the bottom layer here. It's caramel colored. It's 64.67. This is your key pivot directionally for this market, and I really don't see the New Zealand dollar, US dollar getting underneath here unless there was a really, really huge rally in the US dollar, which would take us off our overall negative outlook for the US dollar, which we already have. So then we have above it at 64.85 up to 65.38, these yellow pivot lines. This is our major support band and our major target area. So somewhere in this area is probably the extreme. And because markets leave just like they come in, because the slope is so strong, we're looking for a break that could come down into this area. But then we also have this upward sloping blue line here, which gives us really good support over the long-term trend, which locks us in into this area where we think we get a nice little bounce. So there is a nice risk-reward ratio. So depending on if you're an outright Forex trader or a futures trader or an options trader, level here is right around 67.55, adjusting obviously for the cash versus the futures if you do that. But otherwise, your strike prices for your options, and especially binary options, you can trade these levels and know that this would be your bullish breakout level, and definitely your line in the sand for being a bear. And right now, for you look at your risk reward ratio, from basically at 6.666 where it's at right now, with the risk up to 67.55. Your target zone, your first one is 65.38. So your risk reward ratio is pretty strong here, and that's just touching into the very beginning of the target zone. And with the, like I said, the dollar index falling apart as it is right now, this helps to reinforce this trade. So now let's go and look at the US dollar Canada. And what do we have here? Surprise, surprise. We have another high probable Japanese candlestick pattern. Now this one here, engulfing lines are great, especially when you have them in currencies, because when they've been trending for a long time and you get one, that usually shows that big money has really shifted for at least a good 3 to 8 sessions. Now this is a market that's been breaking for a while. We had this buy signal here actually occur here a week and a half ago, and it failed. The nice thing about it is when one of these signals fail, when you have your risk level, like how we had on those other trades we already showed you. Now this one right here, we put this where this low is right here. It was a lower move low, and then we had the same pattern. It emerged here. Now, this is a 3 inside up buy pattern. Typically gives you a good rally, a corrective rally, not necessarily breaking the trend, a good corrective rally. Now this one here it keeps on going down. It failed, so we know that when you fail, usually the momentum is strong enough to wipe out any of your losses on the trade, because had you gotten in around this area, this would have been your risk and you would have tripled it out already. So once again, we have this pattern emerging. Is it going to fail like this one? Well, if it does, at least we have a good idea of how far it may go. If it takes out this $29.51, then we look for it to go probably another 2 cents down to about $1.27 area. But the one thing is, right now we have the dollar index, which is in buy mode, so that would be a good indication that we will get a corrective rally, and this buy signal should give us a nice pop up somewhere near this upside target zone. But be careful. Use the dollar index as your gauge. If the dollar index continues to be strong and doesn't look like it's starting to reverse and fall apart again, then this signal here is probably going to give you a nice return also, because right now it's at $1.29.96. So we'll just call it $1.30 even for settling for in a couple hours. So if it stays about where it's at right now, then you have a target range of $1.31 up to $1.31.85. Excuse me, $1.31.38 up to $1.31.85. So there again, once again, you have a very nice risk-reward ratio. And if you're a bear, then definitely, like, if you get a chance to sell into this, or if we take out this low, that you're looking at probably seeing another good $2 break in the U.S. dollar Canada. So the momentum is definitely to the downside. This right now is a counter trend trade. It's looking to be a corrective move only. We're not looking to call a bottom, but right now it's good conditions for a correction. And a nice thing is, like the New Zealand dollar, the volatility has been so strong and extreme in the U.S. dollar Canada that, because it's come down so quickly, so sharply, a retracement back would have a really good chance of coming back very sharp, at least in the beginning stages. So we'll see. It's Friday today. We have a long weekend to see what goes on with the Middle East and what's going on with the different tensions there, which all can give us different, scenarios. So we're going to come back on the break in a little bit after this break and cover some more of these currencies.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year, or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year, or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A share bull and ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
This is Teddy Keckstead in for the Power Trading Hour here on TFNN, and you can always find me at www.forex-trading-unlocked.com. In fact, we're on the website right now, and we have one of our people in the chat that asked about the U.S. dollar SGD, the Singapore dollar. So this, he said, is this the end? What is it? The perfect wave 5 down. So for those of you who are not familiar with wave theory, here is the beginning of the wave. This is our 0 point, this top that was up here. Okay, so if you bear with me, so here is our top. We had our first low set here. This is our 1. Then we have this corrective wave up here to set our 2. And then this is our long wave down here, which sets a 3 bottom right here, another lower move low, staying with the trend. Then we come up to here. This is our wave 4, our corrective wave 4. It's a rally, which then goes back to our trend mode, and now we're down our wave 5. So the question is, how far down are we? Well, wave 5s typically end in 3 waves. Here's 1, 2, and 3. We have a nice irony of it all here. We pull out another Japanese candlestick pattern. I'll tell you what, I can't remember. It's been a long time since I've seen so many currencies, especially unrelated from each other, that are pulling off all these different signals. So remember, we had the 3 inside up buy signal we were talking about for the U.S. dollar in the other currency cross. Well, here we have it also. So we set a low 2 days ago. And then yesterday we had a positive session inside. It's kind of a harami buy, what you would call it. And today, if we settle right around where it's at right now, this sets us up to go into this target range right here. Now, this last lower move low here, and then we had this last lower move high. These are key pivots, these yellow lines right here. So the low that we set here, right now we're looking to breach this last lower move low, targeting a challenge of this last lower move high. Should we take out this high, especially, then we are now off the bearish page, and that would put the U.S. dollar SGD in a bearish mode. So when we look at how the dollar index is going also, we're looking for dollar strength. That coincides with this buy signal that we're going on. So was it Bodie? That's the person who asked the question. So right now, yes, does it look like a perfect 5-wave trend? For this move, you couldn't be more picture perfect. This is pretty much exactly what you want for it's a textbook example of a Elliott wave, 5-wave trend move. And now, could it still continue lower? Absolutely. But the good thing we know is, just like these other Japanese candlestick patterns, and if you want to learn how to trade these, you can always, by the way, I'm just going to show you real quick, is how you can go up down to our website. At the bottom of every page on our website, click on High Probable Japanese Candlestick Patterns, and it'll get you going and learning how to do this. Or you can go to our YouTube channel and, like I said, subscribe, and then you can find out when these signals are triggered. And Bodie, thanks. I'm going to actually maybe do an episode on this one, because I don't know what kind of interest we have, but we definitely have a lot in Asia. So back to the format. So the downward sloping trend line we have here indicates that the trend is still intact. We have these 2 caramel pivots right here. This goes back a little more long term. Only if the market gets above here does this thing really start to get bullish. Right now, I think you have a correction in the dollar index, which gives us a nice chance to get a nice rally going, and then probably give us a chance to bottom over time. Now remember, Singapore, see this black line here? This is when the first leg of the trade deal between U.S. and China are going to come out. So that's why I think that this is going to run into a lot of resistance right around this area here, trade deal is going to happen, and then we'll see what's going to go from moving forward, because Singapore has been the bearer of a lot of profits over the course of the last year and a half because of the trade impasse. U.S. dollar weakness versus the Singapore dollar too has also been a benefit for the U.S. and helping this whole trade deal. So maybe because it's starting to come to phase one of a signing, that we will see a longer-term bottom being set. Ironically, a lot of times when you do see it, long-term trend moves change. They actually begin with Japanese candlestick patterns. So thank you for asking about that market there, Bodie. And let's go back to the U.S. dollar Canada real quick and see what's going on here. So we have a 3 inside-out buy signal, just like we just had in that U.S. dollar SGD Singapore dollar currency cross. So this market's been in the bear market for quite some time, and what we have the low from 2 sessions ago at $1.2951 that we're going to use as our risk. So we don't want to catch a falling knife, but right now the U.S. dollar index, once again, we know has been a bull. You can look it up on any website or any news site, especially because of what's going on geopolitically. So that reinforces all of these buy and sell signals. Once again, we have the U.S. dollar Canada. Remember that, what happens once we have this trade deal? We have 2 dates that matter for Canada. One, we have the January 15th, and then we also have the Brexit vote. Because what happens with the trade between the UK and Canada also impacts a lot of what goes on with us in Canada and a couple other things. So these 2 dates are very big. So we have a good chance at getting a rally up towards this $1.31 area. I think this is where we're going to run into a little bit of trouble. So reaching the upside target zone may be a little bit difficult for this market. But if the U.S. dollar correction really starts to get some momentum going, then who knows how it happens. But because of the 2 trade deals, I think you're going to have a little bit of choppiness and range trade kind of things developing over the next couple weeks in this market. Speaking of, we want to make sure that you guys remember the beginning of the video here. Speaking of sideways and big sideways, the British pound US dollar is one of the biggest swinging currencies out there. It's one of the biggest weights in the dollar index. If this thing really starts to settle into a sideways trade, that could start to really restrict the dollar index. If this starts to go just sideways and literally start to bobble around this $1.30 and stay between $1.30 and $1.31 over the next couple of weeks, you're going to start to see kind of what happened over here back in the fall. And if this happens in the fall again, then we're also going to have little issues with the Euro-US dollar as well, which means then we're going to probably start to settle into the same kind of thing here, where we're going to start to see tightness. And especially because oil is strong, these trades, even though the dollar index is playing there, remember, we have to see how the follow-through goes. If it turns back to support and then starts hammering those lows, well, then that's a different story. All these trends go back, and then we're going to start to see all these blue lines that we've been posting everywhere fail, which hopefully isn't going to be the case, because we really don't want that to happen. Now, we've been talking about the dollar index ad nauseum here in this episode. So maybe we should take a look at what's going on. So overall, anyone can see it's in a big downtrend. We've had a lot of downside action over the past week and a half as we went through the holidays. We started off yesterday with an explosive rally, and now the dollar index is slightly higher still. The Dow, although it's lower, is not as low as it was when it started out the day. But overall, we're looking for the dollar index. It's set up for maybe a little correction, but that's about it. The trend is overall lower. So we're going to look at these last trades once again. So what we have that are shaping up. So we have the U.S. dollar Canada, which is our first buy signal that will be at the close today. If it stays positive and right around where it's at, the markets are pretty dead. It's the end of the holiday markets, even though the new year started. It's kind of nice when the holidays fall in the middle of the week. It makes it easy for traders to kind of just step back and just wait, So in fact, actually tomorrow, Sunday, will be the day to start lining up these currency trades. So for your Forex traders out there, let's go over these trades real quick. So we have a buy signal going off in the U.S. dollar Canada with a positive close today. Your risk is me $1.2951. Your initial target is $1.31 even, basically, and any breach of that will have us pushing this upside target zone we have of $1.3138 to $1.3185. Remember that these 2 dates here, the January 15th and January 31st, you have both the Brexit and the U.S.-China trade deals that are coming into effect. So we're going to go back in a couple minutes after the break. Finish this up.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Hi, everyone. This is Teddy Keckstead again from Forex Trading Unlocked here for our last little segment here on the Power. So we're going to blast through these trades that we were talking about during this video. And the first one we have here is the US dollar, Canadian dollar, where we have a 3 inside out buy signal triggering today on the close, with the $1.2951 being your risk. And you have a $1.31 even-ish being your initial target, with a $1.3138 up to a $1.3185 being your ultimate target area. So now we'll go to our New Zealand dollar, US dollar. Like I said earlier in this video, I can't believe how many buy and sell signals we've triggered in the past day or two. We have a bearish engulfing line in New Zealand dollar, US dollar, trade targeting somewhere down near the 65.38 to 64.85 area. So that's a nice risk reward ratio. All these trades are looking for, give you pretty much a 2 to 1 to 3 to 1 risk reward ratio. On this one, you'd have 67 double as your, or 55 rather, as your line in the sand. For any of you bulls, for looking for a breakout for sure, and for bears, you don't want to be short above there because the trend would be raging intact right there. So let's go to the Australian dollar, US dollar. We have a bearish engulfing line in this one, and the trade zone, the China-US trade deal, which is supposed to be signed the first phase on January 15th, is going to impact this trade. The dollar index is falling right into place to help this trade right now, and we're hovering right above this key pivot at 69.30, and we are targeting the 68.83 to 68.52 area, which would be a nice corrective zone for the Australian dollar, US dollar, before the big bulls come back. If they do come back, who knows? We don't know if this is the beginning of a trend lower majorly or just a short-term correction. But right now we're looking for a short-term correction in this market. Then we have the US dollar, Japanese yen, which I have to tell you, unlike the other ones that have given us all kinds of high probable Japanese candlestick patterns, this one is more a fundamental one. We've made the beginnings of a third wave low targeting this lower bearish downside target zone. This market is hard to get a bearing on because it has, when the dollar index has been selling off, even violently, this one has been holding up. So it's going a little bit counterintuitive. And then we have the euro, US dollar also. And we are now done with our show. So there's a sell signal there too. So check us out at
Hello everyone, this is Teddy Keckstedt from Forex Trading Unlocked, and we are here today on the first trading day of the year, January 2nd, 2020, with a little webinar for you, and we have some Forex trading setups for you that we're going to look at. But before we do that, we want to quickly go to our disclaimer first, just to remind you that this is for illustrative purposes only. And with that, we will jump to our live trading screen, and we are going to take a look at the euro US dollar right now that is shaping up with a bearish engulfing line to start off the first day of the trading year. You can see that the market topped out on New Year's Eve, and since opening up today, it opened and has just traded lower for the bulk of the session today. Right now we still have another couple hours before it close, so we don't want to get ahead of ourselves, but if the market settles where it is at right now or even lower, then that will confirm a bearish engulfing line. So that is a very bearish sell signal that definitely has the breaks coming on this current rally. The high from New Year's Eve would be our risk level for any bearish trades setups that you would like to potentially manage if you like this sell signal, or if you have other reasons to sell it. Now the market has been in an overall bull market since the beginning of October. You've made a series of higher move highs and higher move lows, and we had a really nice run up over the holidays. Now remember, we haven't seen much volatility in the euro US dollar until actually the holiday market last week, with a very nice extreme rally 3 sessions back. So for right now, for a little pullback, it looks like a little profit taking. I wouldn't be that aggressive of a bear. It wouldn't take much to get the market back up towards its highs, so use caution. Remember the high from New Year's Eve for your risk level. But right now we have these two little circles here that I've drawn in. The first is on this steeper upward sloping support line where the more intermediate short-term trend is riding. And I think that this is a good little spot where you could see the market retrace down to from this current slide that we have unfolding in the euro US dollar. And then this last higher move low, I think this pivot here to $10.67, this would be the extreme, I think, for any slide. A failure from here definitely starts to put this market on edge. So if you are trading the euro US dollar and you like this sell signal, or you want to learn more, if you're watching us on YouTube, just subscribe to us and leave a comment at the in the comment section, and we will get back to you in our next video, because we're going to have follow-up videos on these trading signals for January 3rd and as they unfold. Then we're going to manage these and see what happens with them. So right now we have, looking for this first trading signal of the year, the euro US dollar, a short-term corrective bearish trading signal forming up that we have to wait for confirmation on the close. And then if it does settle down there this afternoon, then like I said, we have our first target area down here right around $11.08, and then with $10.67 being the extreme for any downward slide. Now we do have Brexit coming up, so don't get too crazy and think you're going to have too much of a move in either the euro or the pound, just because of the politics that are going on. Now the pound US dollar did make a nice little run up for the holidays. It had a buy signal off of this last higher move low that's called a 3 inside up buy pattern, and it actually topped out on New Year's Eve and hit through the target actually a little bit. So right now that has this market pretty much out of gas for that buy signal. The market isn't an overall uptrend. It is a bull, so you don't want to fade it, but I'd be very careful selling into it right now. Like right now, this high of New Year's could be the high for a while. Maybe that's a lower move high before we touch off lower move lows. But first things first, right now we have these two slopes that the market has been rallying on for months. Both of them are not too steep, and this last higher move low, I think where this is coming in, this is a nice little trend line for the market to bounce off of. So you have this first little downside target here where this pivot of $1.3040 is, and I think that's about where you're going to see the market pretty much settle and start to move sideways as we head into Brexit. And then we have this $1.29 lower pivot down here where I have as our longer term potential sell-off target. Anything below here, we take out this higher move low, which puts us in a neutral to lower base bias, not necessarily lower, but definitely neutral. And this market could start to go sideways, especially because we have Brexit that's coming up at the end of the month. In fact, just to show you where Brexit comes in, it is on the 31st, so right there, where this black horizontal line is, this is where Brexit comes in. So I think that you might have a little bit of a swing trade going on for the next couple sessions, but not very much. Really not a sell signal there as far as that market is shaping up. Now we do have another European market where we do have something going on. We have the US dollar Swiss, which has been pretty much following the dollar for quite some time. This is like a balloon underwater. We have a positive close here, especially up where it's at here. I think the dollar index will be set for a nice little corrective rally, not a bull rally, just a corrective rally, meaning it's going against this bear trend right now. So it's short-term bull, but not a bull. Just looking for a little bit of a reprieve and profit-taking move. So I think the US dollar Swiss has a good chance of getting back up to this 98-cent level, maybe even 98.5. That I think is your extreme. So we want to look at the Australian dollar, US dollar. So that's the AUD USD. Because we're looking for another trade. So we have a sell signal in the euro US dollar that's setting up. We have a buy signal up in the US dollar Swiss. The pound, not necessarily. We have a signal that ran out of gas, hit its target, and it's not really setting up for a sell. So plus with Brexit, I'd use caution with that one. We have another bearish engulfing line here. The Australian dollar, US dollar, topped out on New Year's Eve and is doing the same thing like the euro, and we like this trade too. If it stays lower like this, then we're looking for a bearish engulfing line sell signal that's going to target this lower band over here, targeting this upward sloping, first upward sloping blue line. As far as major downside targets, you have to get down to 68.35, take out this other blue support line before you really start to get